This is our third meeting of the Comprehensive Tax Reform Committee, and today's scope is going to deal with collectability. And collectability is basically, you know, we're going to hear testimony today as to how effective and efficient our tax collection system is. It's not talking about compliance, it's just talking about the laws that enhance our different forms of government to do it. And today we're going to hear from the people that really, where the rubber meets the road, so to speak. We're going to have a city manager, a county finance director, a tax commissioner. We're also going to have a CPA that deals exclusively with tax compliance, and we're going to have the Department of Revenue for the state of Georgia, and then we're going to have an overview from the research side. But as we begin, I'd like for Dr. Rossbacher to come forward and welcome us to this beautiful campus. And if you just come here to your podium here, Lisa.
Thank you very much. I'm delighted to welcome all of you. How many are on the Southern Polytechnic campus for the first time today? Welcome. Construction management, and a variety of other fields. What really distinguishes our programs is that we emphasize the practical application of knowledge. It's how students take what they learn in the classroom and apply it to solve real-world problems. We are very focused on responding to the needs of business and industry, and many of our programs were developed in conjunction with business and industry in order to serve their workforce needs. It's no surprise that among our top 4 employers are Lockheed Martin, which is #1, the Department of Transportation, Georgia Power, and Bell South. We have very distinguished alumni, too. You'll see a correlation here. Harold Linenthal, who's the Commissioner of the Department of Transportation, is a graduate of Southern Polytechnic, as is Mike Garrett, CEO of Georgia Power, and Senator Bill Heath, who's a graduate of Southern Polytechnic as well. We are in a transitional stage right now where we are focused on becoming more relevant, even more relevant than we have been, to the needs of business and industry in Georgia. I know many of you are familiar with the book by Tom Friedman, The World is Flat. And one of the points that he makes is that in a flat world where technology levels the playing field in what people know and workforce skills, in a flat world, everything that's on the left side of the brain, the quantitative, mathematical, numerical, logical parts of things, everything on the left side of the brain in a flat world can either be outsourced or computerized. Those are exactly the fields that Southern Polytechnic is specialized in. So what we are doing now is focusing on how to provide value added to our graduates, expanding into more integration of the things that happen on the right side of the brain, the conceptual, creative, synthesizing, qualitative, communicative aspects of the education that we offer, so that we're graduating students who are valuable in that flat world where technology levels the playing field, and we're really bringing value added. We're becoming more comprehensive and figuring out ways to apply more of the technology skills to a broader array of problems in the state of Georgia and across the country. So we're very excited about those transitions that we're going through now. The one question that I've been asked most frequently today is how many students do we have? It's right about 4,000. You won't see a lot of them today because we're in exam period at the end of our summer session. We actually have commencement on Saturday. You will, however, see a lot of very small students. We have a number of summer camps that we run, and we have a number, like 100 or 200 young students on campus today who are part of a week-long program learning how to create and invent a variety of things. It's an invention summer camp. So I just wanted to reassure you we aren't taking them quite that young, but we are recruiting. I appreciate the fact that you're all here today. It's wonderful to have you on campus. If any of you are interested in a quick tour of campus, I'll be around about the time you break for lunch, and I'd be delighted to give anyone who is interested a quick tour of the campus that we have here. Most of all, thank you for being here, and good luck to the committee today. I hope you have a very productive session. If there's anything we can do to help make it more successful, please let us know.
Appreciate what Dr. Rossbacher does both for the community and education. She's a good friend and a great host today. Now we have two leaders from the Platte world. I'd like to introduce Chairman Sam Olens and Mayor Bill Dunaway to come forward to welcome.
Good morning and welcome to Marietta. I'm glad to have you all here today. And I want to say something about Southern Poly. Every town in Georgia needs a good neighbor like Southern Poly. They are a wonderful asset to Marietta and to Cobb County and the cooperation and a lot of things. In fact, Southern Poly is doing a lot of visions for the city of Marietta in the architectural school for our redevelopment. So, Lisa, thank you very, very much. I'm here to welcome you all to Marietta, the All-America City. That we are the first city to get this award in 30 years, the All-America City Award, and we're so proud of that, and it's the result of a lot of hard work. Now, I know I'm here to welcome you all here, but really what I'm here is I'd like to put Thunder Tumbling out on waivers. We'd like to trade them for another legislator. I'd like to trade them for Butch Parrish, really, if I could swing that. But you see, in 1964, I was managing a drugstore. I was a pharmacist, and I got a new intern in my drugstore, and he was from South Georgia. And he was a little bit of a problem because he had these gnats in his eyes and sand in his shoes. And my first job was trying to teach him to count to 100 to fill prescriptions. And the first couple of months he was having to take off his socks and shoes to get to 20 and had to do it 5 times. But we finally got him trained, and I enjoyed working with Butch so much. By the way, he was white-haired back then, too. And I'm now white-haired, except he's got more hair than I've got. But it was a pleasure working with Butch, and I'm sure that it's a pleasure for y'all to work with Butch. And he was real smart to leave Dunaway Drug Company. He's done a lot better in Swainsboro than he would have done here in Marietta. So I congratulate Butch. And we really do want to keep Thunder, our old friends. And I will say this. I know this has nothing to do with taxes, but Thunder's been trying to help the city of Marietta. You see, 65% of our residents in Marietta live in rental housing, and it's a transient population. We've been trying to reverse that. Unfortunately, the legislature at the last minute, 3 years, passed what is wistfully called the Slumlord Bill, and it is hurting Marietta, it's hurting Smyrna, it's hurting all cities. And I hope sometime, somewhere in the future, Thunder's been trying to correct the damages caused by that. I know that has nothing to do with taxes, but you know, politicians. In a few minutes, is going to give a presentation to that to him. But let me say, less than 14% of the revenue of Marietta comes from taxes. We're very fortunate. We have a BLW, Board of Lights and Water, produces profits for us, but also, and that's about 10% of our budget, the rest of it comes from fees and fines. So anything that changes in that mix for the city of Marietta means we'll probably have to raise taxes. And nobody likes to do that. So the bill will be going into that numbers. But quite frankly, we hope you stay in Marietta, have lunch on the square, come back to Marietta. It's a good place to live, and Thunder is a good representative for us. I have to say that his wife and my wife are very close friends, and they both keep us in line. But thank you for being here.
Just for Butcher's defense, I used to buy pills from Mayor Dunaway, and he counted to 100, but he always stopped at 91 when he was putting the pills in. Chairman Owens?
Good morning. I'm Sam Owens. I chair Cobb County and chair the Atlanta Regional Commission. It's a pleasure to be here today. Representative Tomlin is a great asset for our delegation, and it's a pleasure to have him here today and to be on this working group. I'm going to reference one of the folks here today too, but I'm not as old as Bill, so I can't remember that. I had the ability to serve on a committee with Representative Royal, ACCG GMA. There isn't a classier gentleman that I've ever worked with in the legislature. And sometimes we were able to solve city-county issues, sometimes we weren't, but there was no question that he gave it 100% effort to lead us in that direction. It's especially a pleasure to have Representative Royal in our county today. Cobb County is a very special place. We are AAA rated, one of 14 in the country, one of 3 jurisdictions to be AAA rated in the state, that being Cobb, Gwinnett, and the state of Georgia itself. We just earlier voted today at our 9 o'clock meeting to reduce our millage from 9.72 to 9.6. And I would remind you all that unlike other parts of Georgia, Gwinnett and Cobb, in essence, work as cities, even though we have cities within us. So that millage rate is very special when you consider that we're doing many functions otherwise handled by cities as part of county functions. It's also important to note that there's no one trying to get a new city in Cobb County. There's plenty of parts of Metro Atlanta where y'all are dealing with those issues, but my residents are happy. Okay? We have 6 great cities. The mayors are doing an excellent job. The county commission's doing an excellent job, and you don't have bills for new cities in Cobb County. And there's a reason for that. It's the services we provide. It's the accessibility we provide. It's the professionalism we provide. I will tell you, as an aside, that the General Assembly scares me. If I put on both my Cobb hat and my ARC hat, I see legislation by anecdote. I see legislation that's anti-local government. And let me tell you, it's scary out here being a county commissioner. You know, we had 5 new county commissioners in Metro Atlanta January '05. We will have 3 new county commissioners January '07. Vernon Jones, CEO of DeKalb, and me are it come this January with more than 2 years' experience in all of Metro Atlanta. And there's a reason for that. Some of it's retirement. Most of us have been thrown out of office. The expectations upon local government and the ability to do our job are not the same. And there's a lot of pressure put on by the state and state agencies where we are constantly paying for state functions. For instance, both Cobb and Gwinnett pay about $2.5 million a year to subsidize DFACS, the Community Services Board, and the Board of Health. So we see each session, we lose about $1 million on average, and we're asked to pay for it. At the same time, we need to reduce taxes. Most of the jurisdictions in Metro Atlanta have the floating homestead, but some bills that you considered last year and you will consider this year freeze potential rates when I'm already at 0 for residential homestead. And none of those bills would have rescinded that 0 on residential homestead. It would have given me a double whammy. So I would encourage y'all, when you look at tax policy, that you look to see these local constitutional amendments, that you look to see the effects that these bills have on us. We feel literally in local government like we're under attack. And we need some assistance from the state. There needs to be some carrots rather than just sticks. As y'all look to reform tax policy, I'll be the first to tell you that the state needs to substantially reform its tax policy. But don't kill local government in that process. So once again, it's a pleasure to have you here. We greatly look forward to frankly, some very significant changes in Georgia tax policy. But I would just ask you on behalf of local governments, keep in mind, you know, we're swimming uphill. And we need you to look out for our interests at the same time you're changing tax policy. Thank you very much.
Thank you, Mr. Chairman. Now we'd like to introduce ourselves to you. Representative Mills, could you start us off just, and we'll come down the road and introduce you.
My name is James Mills. I represent Hall County and State House District 25. I also chair the Banks and Banking Committee, and honored to be here with you today.
Thank you, Representative. My name is Chuck Martin. I represent the 47th District in Georgia. It's Alfreda Rawlsville, Greater North Fulton, just to the east of you here. I'm a former mayor, so I hear the County Commission Chairman and the Mayor's words about local government. We've got to find a way to work together from the state. I most pointedly to this committee serve as Vice Chair of Ways and Means with Chairman O'Neill.
My name is David Knight. I'm the representative from District 126, that being parts of Spalding, Lamar, and Butts County. And I'm a CPA in my real life, so this is a pretty interesting study committee, and look forward to the findings that we come up with.
I'm Butch Parrish. I live in Swainsboro. I represent House District 156, which is Emmanuel, Johnson, Candler, and parts of Bullitt County. I'm glad to be here today.
I'm Richard Royal. I represent District 171, which is in southwest Georgia, Colquitt and Mitchell counties. I served 10 years as a city councilman before serving 23 years here in the House. I look forward to hearing your testimony.
I'm Steve Tillman, and I live in Marietta, and this is within my district. And Senator Hill, will you start on this?
Sure. I'm Jack Hill from down in southeast Georgia, represent 7 counties west of Savannah, kind of right up I-16, almost to Dublin. Senator Seaball sends his regrets. Prior engagement has him out of town today, and he's unable to be here. But sorry that I missed the first meeting, but I look forward to a great day today and some far-reaching discussions as time goes on.
I'm Senator Seth Harp. I represent the 29th Senate District, which is Muskogee County, Harris, Meriwether, and Crook counties, specifically the metropolitan areas of Columbus on the south and LaGrange on the north end. My district is on very much on West Georgia. It's a combination of extremes. We have some very high-end metropolitan areas with some very high property values, where we have some very depressed areas in Meriwether County. It's my pleasure to be with you also. My background is as I'm an attorney in private practice with my former specialty was taxation.
Thank you. Our first presenter today will be Dan Ray, who's the tax commissioner for the county of Rockdale County. And Dan, if you'll.
Thank you, Mr. Chairman, for indulging me and allowing me to have a seat. I've got a herniated disc and a pinched nerve, and I cannot stand up but just a few minutes at a time, and so I will have a seat. And I wish we could do some insurance reviews. It's taken them over a week to decide whether or not I can get a cortisone shot this afternoon. So I'm managing here without any pain medicine today, and I do appreciate you guys allowing me to sit down. I am Dan Ray, Tax Commissioner of Rockdale County, and one of the things that I wanted to discuss is the whole procedure of how we get a tax bill out to you. It's a fairly long and arduous process, and some things have been done kind of piecemeal over the past several years that have created some impediments both to the tax commissioners, to the Board of Commissioners, school boards, cities, and to the Board of Assessors, that have made it more and more difficult to get the digest done in a timely manner. We have an August 1st deadline of which we are to have the digest prepared and presented to the Department of Revenue for their approval. And there's various steps that must be accomplished to have that approved. And it's been very difficult to have it done by August 1st, as I said. So what I want to do is kind of bore you here for a few minutes and go through the process that we need to do, and to see that as part of this overview, look at the whole system starting on January 1st and see if we can make some adjustments on time frames of getting certain things accomplished during this time period. As we all know, January 1st is a snapshot here in the state of Georgia. The condition of your property, the value of your property, and ownership of your property is the starting point. In other words, if your house is only half completed on January 1st, you build a new home, then you're only taxed at half the value of the house it is at that point in time. So that's the valuation assessment date, and this is where the starting point for the assessor's office. It is also the beginning period where the books are open, in which you can file a return, make application for your covenants, make application for Freeport exemption, and continue over the past 2 years now, we've had the ability to take your homestead exemptions year-round. Used to, you had to wait until January in order to do that. The next deadline is March the 1st. This is now the new deadline for filing a homestead exemption on property you have purchased since January 2nd of the previous year. You must own and occupy your home as of January 1st of your current year. And in those counties such as DeKalb and several others who have split payments or dual payments, March 1st is the deadline for you to file a tax return and other exemptions. The next deadline is April 1st. This is the deadline to file your tax returns for both real and personal property. It's the deadline also to make application for covenants, and it's the deadline to file for 100% Freeport exemption. You can get a prorate amount of your Freeport exemption up until June the 1st. The next deadline we're faced with is April 11th. The law commands that the receiver of the returns must have them all turned over to the assessor's office by April 11th. The next deadline is June the 1st. This is as I said, the final deadline to have a prorated share of Freeport exemption. And in those counties that have the split or dual payments, this is the deadline for the assessors to have the digest completed and turned back to the tax commissioner. For the rest of those counties, July 1st is then the deadline for the Board of Assessors to have the digest completed and return back to the tax commissioner for him to begin his process, and for the process of the schools, the counties, and the cities to do their advertising and determine what mill rate they're going to use. As you can imagine, with the size and growth in the counties and divisions of land, that period from April 11th through July the 1st has become one of the first bottlenecks. During this time, the assessors have to complete the review of all returns, applications for homestead, Freeport, and the covenants, and all unreturned property. The assessors have to mail out all assessment notices, in which the taxpayer now has 45 days to file a return, or file an appeal, And upon receipt of an appeal, the Board of Assessors must review the appeal, and if they take any action on the appeal, then the Board of Assessors must send out a new assessment notice, at which at that point in time the taxpayer has now 21 days to file an additional appeal to the Board of Equalization. So the assessors are under pressure to resolve as many of the appeals as possible before the July 1st deadline in order to get the number of appeals down below a 3% level. There's a threshold there that if it exceeds that, then the state will not approve our digest in order for us to produce our tax bills. Then, as I stated, August 1st is the deadline for the tax commissioners to present the digest to the state, to the Department of Revenue, for their approval. Now, during July 1st to August 1st, this is the next bottleneck that we're faced with. During this time period, the county, the city, the school system, and various other types of districts that we have in your own county must all determine the respective millage rate, arrange any public meetings, publish various legal notices in the legal ordering to the digest history and meeting dates, and plus advertise if the mill rate will be a tax increase. However, before any of this can happen, the tax commissioner must review the digest and ascertain its correctness. Any errors found must be reconciled back to the assessor's office. And only then can the tax commissioner give the above authorities the taxable values from the digest, for them then to make the determination of what the mill rate should be. Then they go through the advertising and the hearing process. This is tough to do in 30 days. Everything has to happen almost in perfect unison. Rockdale County, we're the second smallest county in the state of Georgia. We're 1 square mile bigger than Athens, Clark. And I'm also probably the most simplistic. I have 1 city, 1 school, of course 1 county. And to get all of this done within 30 days, just dealing with 3 entities, and we have no special districts, is very tough. I will have my digest done tomorrow, and we'll be taking it to the state tomorrow before the August 1st deadline. This will be the first time in my 14 years that I've had it there on time. It takes extreme cooperation from my school, my city, and my county commissioners, which I'm very fortunate. I do get great cooperation out of all 3 groups, and I'm very fortunate to that. But it is very difficult to get this together, and then as the commissioner spoke of here, Cobb County has 6 cities. So that's 6 separate entities that have to do their own determination, millage rate, advertisement, and then so it can get very complicated, and there can be a lot of ads in the papers that can lead to a lot of confusion. And like I said, this is extremely difficult to get done in 30 days. Furthermore, the various ads can be very confusing. One ad, advertises a, quote, tax increase of a certain percent over the rollback amount. This percentage is always different from the percentage increase shown in the 5-year history. For example, this year Rockdale school system rolled its millage rate back from 21.44 to 21.0. However, this was still a tax increase of 0.66% over the rollback rate. But in the 5-year history, we stated that there was a 7.1% increase in tax revenues over 2005. Now, to the average taxpayer who doesn't understand all our terminology, this is extremely confusing. And I get many phone calls saying, well, what are y'all doing? Are y'all raising it 0.66%, or are you raising it 7.1%? And then I have to try to educate them as to what the 2 numbers mean. And they probably still don't understand it even after that. But it is very confusing having ads sitting side by side. One says 0.66 and the other one says 7.1. It sounds like almost a deliberate attempt on our part to confuse the public. At this point in time, once the digest is approved, the tax commissioner then prints his bills and has them mailed out. Most of the counties in the state of Georgia have December 20th as their due date for their tax bills. So if you get your bills out sometime in the middle of August, the taxpayer now has from the middle of August until December the 20th to pay his taxes. Some of the others are November 15th or December 1st and December 20th. Now there are, as I said, a few counties that do have a split payment or a dual payment, such as DeKalb County. I think Bolton has a 2-payment system. Gwinnett may have it, and so their due dates are slightly different. The minimum in the law requires us that you have 60 days to pay your taxes. So if the digest is delayed, and if it's delayed further into the fall, and you do not get the tax bills out 60 days ahead of December 20th, then the new due date is whatever 60 days out from the date of the mailing of the tax bills. The next day is December 21st, let's say the day after taxes are due. Anything unpaid at that time becomes delinquent. However, in a perfect world, everything that was mailed into you would be posted by the afternoon of December 20th. The law requires us to, on the 21st, to issue our 30-day delinquent notice and also add 1% interest. But in the real world, it usually takes us another couple of weeks to get everything posted, because you usually about that time have trays and trays and trays of mail. Many folks wait to the last minute to pay their taxes. So usually it's the end of December before I actually put an interest on and get the opportunity to mail out my delinquent notices. And that 30-day notice is the notice that informs the taxpayer that if he doesn't get his taxes paid in the next 30 days, that a tax lien FIFA will be issued and recorded in the GED against him and his property. And there again, I said that usually does not happen until the end of December, maybe the 1st of January. January 31st of the upcoming year, another month's interest is assessed, and the FIFAs are produced on those that are still not yet paid, and I have them recorded in the clerk's office. February 28th, another month's interest is added. March 31st, another month's interest is added, and then for those who still haven't paid, this is now 90 days plus after the due date, there's a 10% penalty added to anybody that is not paid at that point in time. And then usually at this point, the tax commissioners begin the levy process of levying on the property and actually selling them at the tax sales. Now, what we want to talk about today is some of the solutions to help maybe streamline this or make it less confusing to the public, and either speed up the process or give more time to the various entities involved with this whole process up to the time we take it to the state. January 1st would continue to be the date of the snapshot. One of the things we might want to do, and it's up at this point in time, there is a law that allows the tax commissioner to designate the Board of Assessors as the receiver for all applications for exemptions, as well as the personal property and real property returns. I would suggest perhaps we need to do that across the state. This would allow the assessor's office to immediately begin working on any returns, any applications that they receive at that point in time that are not being held up in the tax commissioner's office, as they are sent over. That may help speed up. March 1st, may recommend that, to consider making that the tax deadline for not only homesteads, but the tax returns, applications for covenants, and the Freeport to have 100% Freeport exemption. This will give the Board of Assessors another 30 days to begin to work these items out and to review all the property that needs to be reviewed at that point in time, and review the applications for homestead to make sure they're qualified, and all the applications for the various covenants. This would give them an additional 30 days to prepare the assessment notices. Perhaps then April 1st could be either a deadline or a recommended deadline that the assessors have all the assessment notices mailed out by April 1st. Then the deadline to file an appeal, which is now for those counties that have a December 20th single billing, is 45 days out from the date of the assessment. For those that are on the dual payment or split payment, you have 30 days to file an appeal. Might suggest that we move that to 30 days for everybody to file an appeal. And that would make it either May 1st, or if you wanted 45, be May 15th to file an appeal. And if we can work the system so that it can fall within those dates, then you could have statewide dates that everybody, no matter what county you live in, no matter what property you have counties in, you will know that I've got to have a return filed by March 1st, that I have to be expecting an assessment notice to be out around April 1st, to know then that I've got either May 1st or May 15th to file an appeal, so that if you have multiple properties in multiple counties, you have lots of different dates that you're having to keep up with. A next recommendation would be like July 15th. This would then be the due date to have the digest returned over to the tax commissioner. This gives the assessors 60 days, approximately 60 days, to work on all the returns, to work off the appeals. And as I said, they need to settle as many of those appeals as possible so that they fall below 3% mark, so that your digest can be approved. And then they move the deadline to have that digest submitted to the state from August 1st out to September 1st. This gives you 45 to 60 days time for the tax commissioner to do what he needs to do, the work he needs to do on the digest, and also the various cities, counties, and school systems within your county. It'll give them some time to review, do the advertisements, have the public hearings that need to be done before they set the mill rate. And this would still work even with a November 15th due date. You need to have your tax bills out by September 15th to have a November 15th due date. You've got up to October 1st to get your bills out if you have a December 1st due date. And you've got out till October 20th in order to have a December 20th. But if you do have your digest approved by September 1st, there's no reason not to go ahead and get your bills sent out. That just gives the taxpayer more notice and more time to come up with the money to pay their bills, which I think is a good idea. And as I said, Fulton, DeKalb, and maybe Gwinnett do have the dual payment, which their dates are different from this. And that would have to be taken into consideration as to when their digest would have to be prepared. Another solution I would think is the confusion caused by the ads. We need to look at maybe consolidating those ads into one standardized ad. I think the 5-year history is excellent. It does give everybody a picture of what's been going on in your county, in your school systems, special districts, and whatnot over the past 5 years. If you wanted to break that out into how much of the growth is due to reassessment, I think that might be a workable solution. You have other growth, and you could even state as to how much tax revenue is being generated by reassessments, and then what revenue is being generated by other growth, assuming you've got growth in your digest. And I think we need to take a look at the timing of the various public hearings, whether we need 2 or 3, and maybe see if there's some way to shorten that time span in the advertising. Maybe have 2 hearings, one before 10 o'clock, one after 7 o'clock. I think that's a good idea to require one to be in the evening, like we're doing now. And then have a final, have a separate meeting to actually vote on the millage rate. A third one, and this will be somewhat controversial even amongst the tax commissioners, is to take a look at as to why the 10% penalty is not applied to a delinquent for 90 days. That's giving another 3 months for somebody to pay their bill. They're already getting anywhere from 2 months to 4 months to come up with the money to pay their bill. What is the logic behind 3 more months? We're talking now almost 7 months in some cases before a tax bill actually begins a punitive punishment. So I suggest maybe looking at that, whether that needs to be moved up to maybe a 30-day or 60-day one instead of a 90-day. Number 4, and this is one that I know may get some complaints from the banking, but I would like to consider making it mandatory that all mortgage companies and banks have an escrow account on any loan that exceeds the 80% financing on the loan-to-value ratio. We are seeing a tremendous number of people who are not having escrow accounts with the new federal financing where they're getting 100, 104, 105% financing, and they're not having an escrow account. And they're buying houses, they're way in over their head, they can't afford them, and the next thing you know, they get a $3,000 or $4,000 tax bill on a $400,000 house, and it's not being escrowed. And they don't have the money, and they'll just tell you, I don't have the money to pay it. And I don't know why, but they don't have the money to pay it. And I was shocked to find out that many of these homes do not have escrows on brand new houses. But even George Wingo, this is George Wingo, the tax commissioner for Fayette County. George is also seeing that in Fayette County, which is considered a wealthy county, that he's seeing a growing in his delinquents from people who have bought new houses in the past year or 2 and do not have the money to pay the taxes because they do not have an escrow account. So I think that would be something that might consider. Also, I think an idea along that same line is to require all homeowners, home buyers, to attend a class on home ownership. My daughter just bought a house, and she was required by Bank of America to attend their seminar. It was a 6-hour seminar on one Saturday, and I went with her. And it was excellent. And the lady who was there happened to be from DeKalb County and made it very plain there was about 60 new homeowners there, that if they don't pay their taxes, and if you live in DeKalb County, the tax commissioner of DeKalb County will sell your property on the courthouse steps. And I spoke up and said, I'm the tax commissioner from Rockdale County, and I'll sell your house on the courthouse steps if you don't pay your taxes. And so there are 60 people there who now know they must pay their taxes. But it's surprising how how many people we come up and have the excuse, well, I'm a first-time homeowner. I didn't know I was going to have this tax bill. I've been a renter all my life. Why am I supposed to pay $4,000? And I'm appalled that there are people who don't realize that once a year you're going to get this tax bill, and forever. I think that's something that may need to be considered also, is training new homeowners as to what their responsibilities are. Number 5, we're tax commissioners are in great support of what y'all doing here and reviewing this. We suggest there may be a need of a rewrite of the property tax code, and also what we would like to see as part of this is a section on the non-judicial tax sale, and have it written up as a procedures and policy, because much of what we're having to do now in tax sales is not in the code, but it's due to Supreme Court rulings, both the state Supreme Court and U.S. Supreme Court, of things that we need to do in order to process and have a tax sale. So I think it's time to go back and look at that. Y'all did an excellent job in doing the judicial and rem tax sale. It's very laid out, step 1, 2, 3, how to do it. We think it's time to do that for the non-judicial tax sale also. We also support your review of the fee and commission structure, and that's being examined to see what the true cost is to running local county government. We suggest that the cost to run the tax commissioner's office and the tax assessor's office should be self-sufficient. It should be paid for by the fees and commissions that we collect off the various things that we do, and that our office not be necessarily paid through general revenue. And finally, and this will be very difficult, I know, because we have 159 counties, and it seems like now we have 159 different homestead exemptions. If there's some way to review that and see if we could standardize them once again, that we had it once upon a time, raise the state exemption, and then take a look at the various city, county, and school exemptions. One of the benefits to having a standardized system throughout the state would be that people could actually file their homestead exemption at the closing. Right now, an attorney can't do that because he's doing closings for various counties, and every county's got its own set of homestead exemptions and applications and forms that have to be filled out. So I think if we standardize it, it might make that whole system a much simpler process to administrate. Mr. Chairman, that's all I have. If want to entertain questions or whatever your process is.
Are there any questions from the committee for Commissioner Ray? Yes, sir.
He went over quite a list of wishes and wants. I tried to keep up with him, but if he submit that to you or Chairman O'Neill,
be glad to.
The distribution members, I'm good with that.
Thank you.
Be glad to.
I see on the tax assessment notices that go out in January, it's always written very conspicuously at the top, this is not a bill. I hear from constituents all the time, they feel like that's deceptive. They feel like a lot of people just dismiss the merit of the document thereafter, literally sometimes throw it away and don't find out until it's too late that they had appeal rights and so forth. What's the purpose of writing, this is not a bill? I mean, what good does that do anyone?
The problem that we had were that people thought they were getting a tax bill in January, and they were calling up complaining, why was I getting a bill in January? And they were actually sending in the amount of money, or they would call and say, well, you didn't tell me how much money I'm supposed to send. And so I think that's why the assessors went to that route to say, this is not a bill, this is a valuation of your property, so that they would understand that this is going to affect the bill in August. But that was the complaints that we were having, is that they were constantly, well, you didn't tell me how much I owe you. And what are you doing sending a bill out in January? You just sent one out 3 months ago. That was just part of the education process to the general public is, and like I said, and maybe that's why as new homeowners there should be that explanation of what an assessment means. And you're right, they'll get that assessment notice and they'll throw it away Then when the tax bill comes out and they see their bill went up $200, then they want to come file an appeal. Of course, you can't now at that point in time. It's too late. So I think that's a part of the process of trying to educate people as to what that assessment really means, and it's going to go up. I know there was some talk of maybe putting, what the effect is going to be on your tax bill. And, of course, the only thing we do would be assume a millage rate from the year before. We could say, this is what your tax bill was last year, and this is what it's going to be estimated in August. Something, maybe one way to clear that up. I don't know.
Mr. Chairman, Mr. Ray, I would appreciate it if you would reduce to writing and give us a copy of your want list.
Any other questions for the Commissioner? Well, good luck with your cortisone shot, and thank you for your presentation.
Thank you.
Well, our next presenter is going to be the Finance Director for Cobb County, Virgil Moon. And while Virgil's coming forward, I'd like to ask if Chairman O'Neill has any comments, and if he'd like to introduce himself to the crowd.
I just want to apologize to you, Chairman Tillman, for my tardiness. It was not intentional. There was a big hour-long snafu on 75 where a sign had fallen into the road just above McDonough, and that caught me this morning, unfortunately. So, other than that, I'm just glad to be here. Thank you.
Welcome to Cobb County.
Thank you, Mr. Chairman, and I too would like to welcome you to Cobb County, distinguished senators, distinguished representatives. We appreciate you all being here and visiting our county. Also, our honored guests and officials. We hope while you're here, if you don't live here, you'll consider coming and living here in the future. We also want you to spend some money here while you're here, so go out and fill your car up, or take your spouse or your significant other a gift back and buy it in one of our fine stores here in Cobb County, and we'll be sure to collect that money and put it in the coffers. Representative Tomlin, I want to thank you not only for having this arranged to be here in Cobb County, but also for your excellent representation on our delegation. Many of you may not know, but Representative Tomlin is the chairman of our local delegation here in Cobb County, and we think we have a great delegation. He does a great job of representing them and guiding them through the legislative process, and we appreciate that. Today we're going to talk about not only Cobb County revenue collections, but also statewide issues, because I think without exception, the 8 areas we're going to talk about not only affect Cobb County, but they also affect all the other counties in Georgia as well as the cities in Georgia. And I'd like to give credit to ACCG and GMA for working with us. As our chairman said a while ago, we try to work together with our cities here in Cobb County. We have great cities, and we have great cities throughout the state of Georgia. And ACCG and GMA, 90% of the time, maybe more, agree on all the issues, and the other 10%, we agree to disagree. And sometimes we bring those forward to you, and we appreciate you working with us. Chairman O'Neill, I know you've worked with us very, very closely over the years. Chairman Royal, you also have worked with us over the years, and we appreciate that. A little bit about my background before I brag a little bit about Cobb County. I've been with Cobb County 25 years. I've lived here 30 years. I've been the treasurer, the internal audit director, the finance director, and now an agency director over 6 departments. My family lives here. My grandchildren live here. I'm very proud of Cobb County and very proud to be here in Georgia. The chairman stole some of my thunder earlier when he got up and welcomed you to Cobb County, but since he's our chairman, that's fine with me. We are AAA rated. Our population a year ago was estimated by the U.S. Census at 663,000. We have about a $685 million operating budget. Our long-term capital budget is about $1.4 billion, most of that going for transportation needs. We have one of the highest retail sales rates in the state of Georgia, $12.6 billion a year. That's $34 million every day, 7 days a week, 52 weeks a year. So we'd appreciate you contributing to that again. Thank you. We're a leader in job creation, and we're headquarters for 3 Fortune 500 companies, Coca-Cola Enterprises, Genuine Parts, and Home Depot. We're going to talk today about 8 major revenue sources that we think the legislature as well as the state departments can help us with on the collection effort. As you know, if we collect more of the money that's owed to government. We can keep taxes low, which is one of our main priorities here in Cobb County, as well as throughout the state in our cities and counties. The first issue is in the sales tax area, general, state, and local government. Sales tax, the collection on compliance, we believe, could be strengthened by additional audits. Now, we realize, in working with the Revenue Department, I see the Commissioner Graham is here, they work with us very closely, and we bring things to their attention, but frankly, they don't have enough auditors to cover the state of Georgia. And we're charged, Cobb County is charged, as well as every other county, and 1% for all the money that's collected for us by the Department of Revenue. Now, in our case, that's about $2,250,000 a year for the Board of Commissioners and the Board of Education in Cobb County. On a statewide basis, that's probably close to $30 million a year, because I believe they collect close to $3 billion a year for local governments in Georgia. So we're contributing $30 million a year into the coffers, and we think in return we should get more audits. One of the ideas that we've kicked around is to use part of the 1% to hire more auditors and maybe dedicate them to counties and cities. Now, that's not only going to benefit counties and cities in Georgia, it's also going to benefit the Revenue Department as well as the state of Georgia, because you'll also be auditing your 4 cents at the same time you're auditing our 2 or 3 cents. And you'll get better compliance and you'll get more money, as well as the additional 1% for collecting more for us. So we think this is something we would appreciate y'all looking into and talking to the Revenue Department about it and going through the appropriation process. The most significant thing I want to point out today is auditors. Now, some of you CPAs, I know that some of you mentioned, I think Representative Knight's a CPA, Representative Thompson's a CPA, I'm a CPA, so I'm familiar with audits. They pay for themselves about 8 to 1. Okay, now think about that. For every $8 you give, for every $1 you give to fund auditors, you're going to get $8 back. I mean, that's a no-brainer to me, folks, for compliance issues. So, I'd really like y'all to think about that, and that, to me, is, I know it's 2 different processes. When you go through the legislative process, you got an appropriation on one side, you got the revenue budget on the other side. But keep that in mind as you go through next year's process, that you'll get a lot more money on the revenue side if you appropriate a little bit of money on the appropriation side. And we would appreciate it, and the state of Georgia would be ahead too. Next issue, the state accepts sales and use taxes from businesses that are subject to error. Now, the issue here, for the most part, is zip codes. A lot of businesses in the state of Georgia, and there's tens of thousands of them, rely on the zip code to identify what county they remit their taxes for. And there's a lot of zip codes in Georgia. In Cobb County alone, there are 8 major zip codes that cross county lines. Okay? A lot of times, these businesses identify themselves wrong. For instance, in 30339, in Cobb County, about 90% of 30339 is in Cobb County, and all the businesses are in that area, 90% of them. Yet, if you go up and look on a database, on a website, it identifies that zip code as Fulton County. Okay? So if you don't know where you're at and you're a business there, you may put down Fulton County, and our money may go to Fulton County instead of Cobb County. That's a significant issue, not only in the metro area, but throughout the state of Georgia. We think strongly, and ACCG and GMA support this also, that the state should implement some statewide system that identifies business locations more accurately, i.e. the GIS 911 database is much more accurate than the zip code databases. And those are available today to be purchased and implemented. Third item is no national system in place, and I'm talking about the national, let me make sure I say this right, the Streamline Sales Tax Project, whereby national firms like Walmart and Target and all the other ones, when you order something online and you receive it in Georgia, that the tax they collect and charge on it actually comes back to Georgia and to the counties that you live in, where you purchase it. Now, right now, Georgia is not one of the ones that's joined that system yet, and Congress has not implemented it fully yet. So we would like Georgia to consider being a full member of the state in the multi-state project supporting the streamlined sales tax. The estimates here are anywhere from 3 to 5% additional sales tax statewide. That's a significant amount of money that could be coming in not only to counties and cities, but also to the state of Georgia. So we need you to encourage the state to come online and become a full member, but also to encourage Congress to pass this in Washington for all states in our country. The next issue, we just met with the Revenue Department and ACCG and some GMA folks on this, and we appreciate them meeting with us on it and talking about it, is the way that we collect sales tax on motor fuel. When you go and fill up your tank with gas, then you pay a sales tax along with your motor fuel tax. In our case, it's 2 cents, one for us and one for the Board of Education. Now, the state collects it for themselves. Their 4 cents, a different method than they collected for the counties. And that's what this issue is about. The state started, I think, 2 or 3 years ago collecting it at the distribution level, okay? That means the distributor goes ahead and prepays the 4 cents to the state at the distributor level, not at the retail level. And as a result, the state has collected a whole lot more taxes, a whole lot better compliance, because you collect them from about 25 to 30 distributors versus tens of thousands of retailers. So compliance is significantly better. We would like the state to collect for counties just like they collect for themselves through the distribution method, because we'd like this additional 10 to 25% also. And it's strictly a compliance issue. And so we would like the legislature to consider talking to the Department of Revenue and working with ACCG and GMA to require the distribution companies to also collect the county taxes at the same time they collect the state taxes, prepaid. The next issue is on property taxes on public utilities. As you can see, the average growth over the last 5 years in Cobb County, and I think this is true in a lot of other counties, maybe statewide, public utilities growth. Now, this is where the state of Georgia, Department of Revenue, actually values public utility property. And that value is what we collect on. So if that value lags behind, then we collect less money. Public utilities in Cobb has averaged 2.2%, okay, over the 5-year period. The rest of the digest is averaged 7%. So the rest of the digest in Cobb is growing at 3.5 times the public utility digest. That just doesn't make sense to me. I mean, public utilities make money like all other businesses, and they also own land like all other landowners. So if land's going up and their income is going up, their value should be going up. Property taxes on motor vehicles. Again, the state values motor vehicles. And again, we would like the state to reexamine their methodology here. As you can see, Cobb County added 33,000 more vehicles over the last 5 years, and yet our digest went down. Now think about that, folks. I mean, when I go buy a car today, I pay more money than I did 5 years ago. Don't y'all? So that digest should not be going down like it. It just doesn't make sense. So I would like the state to reexamine the methodology the Revenue Department is using. And the commissioner may address that as he gets up and talks to us. But it just doesn't make a lot of sense to me for your vehicle number to go up that much and your value to go down over a 5-year period. Utility franchise taxes. It's called a hidden tax. And it's called a hidden tax because it's on your utility bill and it's not necessarily identified as such. Now, I told you the cities and the counties agree on 90% of the stuff a while ago. Well, this is one of them we don't agree on. Okay, and the issue here is that some utilities, Georgia Power is an example. Bell South changed theirs. They don't do it this way anymore. But Georgia Power has a statewide rate that's approved by the PSC, and that rate is charged throughout the state, okay? And that rate includes a tax, okay, called a utility franchise tax that's spread again to all their customers, okay? That means countywide in Cobb County's case, throughout the state of Georgia. And yet the money only goes to the cities. None of the money comes to the counties. So all our unincorporated residents are paying this hidden tax on their utility bill every month. And the county's not getting any of the money to provide services back to those same people. The cities get all that money. And that's because that's the way the law's set up. And obviously the counties would like to collect their part or not pay their part, one or the other. Next area is insurance premium tax, and this is our state insurance commissioner's office. Right now, the way those dollars come in, and this is about $20 million a year to Cobb County, and it's literally hundreds of millions of dollars statewide for all the counties and cities. Okay, the dollars are due to the insurance commissioner on March the 1st each year. The state bills that out and collects this money for counties and municipal taxes by August the 1st. That's 5 months, folks. It's 120 days, or 150 days, excuse me. And then they're not due to counties and municipalities until 60 days later. So now you're up to 180 days almost, okay? Well, we think you should be able to collect that money, bill it out, and collect it and remit it to the counties and cities a lot quicker than that. I mean, within 30 to 60 days. I mean, you're talking about 7 or 8 months to collect money. I mean, none of us that runs a business would do that. We wouldn't allow people to take 7 months to pay us. So we would ask you to look into that, please. The hotel-motel tax, now there's some lawsuits going on in this issue right now. Right now, some of the internet brokers that sell you hotel rooms and rental cars and everything else on a trip, they go ahead and collect in advance the taxes based on that room rate that you're paying, okay? And yet they have a side agreement with that hotel, for instance, that's going to get a significant discount on that room rate. For instance, you may pay it at $100 a night, but they may have a deal with that hotel that they only pay $60. Well, they're not remitting the difference in those two numbers in taxes back to the localities. They're keeping that money. They're collecting and they're keeping it, okay? And there's some lawsuits over that right now. So we would ask y'all to look at the state law of Georgia to make sure that they're in compliance with state law through audits, and if we need to strengthen those laws, that we should do so. This particular tax is about a $10 million a year tax in Cobb County. The next issue is 911 fees, and the issue here is right now you can go buy prepaid cell phones, okay, which means you buy them and they got 120 minutes on it or whatever. But they don't pay any 911 fees on those prepaid cell phones, okay? And you should be paying 911 fees on all telephones in the state of Georgia in order to support the emergency services. And we would ask y'all to look into that, please. The final issue is court fines. The state legislators, when they approve any kind of fines to go along with, you know, add-ons is what we call them, there's a priority list of what gets paid first. In other words, if somebody doesn't pay the whole bill and there's a priority list, then somebody gets left off. Somebody didn't get paid. Well, right now, counties are number 9 on that list. Number 9, okay? There's 8 things before the county gets its money. Now, the county's the one that pays for the expense of the court. So we think we ought to be a little further up on that list. Since we have to pay for the expense of the court, we ought to at least get enough to reimburse us for paying for the court. And we'll be glad to provide you that list. And we also don't receive about 30 to 50% of the money that initially goes through the courts, because a lot of people don't show up for court. You have to issue a bench warrant. A lot of people stop paying their fine after the first payment, and we have to issue a bench warrant. So 30 to 50% of the time, we may not get our money. So if we're 9th on the list, folks, we're losing a lot of money. And this is statewide legislation usually. So counties are never number 1 on the list. There's about 5 or 6 other things that I won't talk about, but I'll be glad to meet with y'all about that's ahead of us. And we don't think we should be that far down the list. And we'd ask y'all to look at that, please. On grant reimbursement, now I'm using GEMA as just an example here, but counties and cities throughout the state of Georgia receive grant reimbursement money from various agencies in the state. State DOT, GEMA, other organizations. And the issue is how long it takes to reimburse us, because we're out of pocket that money, folks. In this case, we were out of pocket hundreds of thousands of dollars. I think our bomb truck, which is state-of-the-art and cost about $800,000, I believe. I mean, we were out of pocket 4 months of $800,000 before we got reimbursed. Okay, and we had everything in order. We didn't have to rewrite anything that we turned in. I mean, it was all correct. So it's not like we didn't turn in the right paperwork. So we would ask the state to look at the collection reimbursement cycles of the various agencies in the state to make sure that counties and cities are getting reimbursed on a timely basis in 30 to 60 days. I know Cobb County has a policy with all our vendors, because we do business mostly with small businesses. I think 90% of all our businesses that we do business with are considered small business. We have a 30-day turnaround. If they invoice us and they've done the work and provided the services, we pay them in 30 days. And I don't think that's unreasonable. In conclusion, I'd just like to say that governments are charged with working together as we are today and seeking ways to streamline our revenue collection methods, yielding better efficiencies, looking for ways to maximize compliance and ensuring equity for all the citizens of Georgia as well as Cobb County. And I think by working together, the more we collect of what we're legitimately owed, the less taxes we have to burden our residents with. And that's one of all our goals. I appreciate y'all listening to us today. Be glad to answer any questions.
Any questions for Director Moon?
I think I asked this down in Camilla when it was brought up. You talked about zip codes for use of collecting sales tax. It's been a while, but isn't there something nationally called a geocode that is specifically slated to tell you what taxing jurisdiction you're in?
There probably is, because right now Cobb County, and it's probably tied to the same kind of database that 911 is. We just went from phase 1 911 location to phase 2, and now we can locate a telephone, even if it's a cell phone, within about 100 yards, okay? So if you're stranded on a highway somewhere, I mean, we can locate you within 100 yards and find you. Now, before that, the other technology was maybe a mile or a mile away, which made it very difficult to find people on cell phones.
Yeah, I'm just going back to 9-digit zips related to 4 or 5 years ago when I was in the business. The 9-digit zips related to a geocode, which is a specific taxing jurisdiction. I guess I'll ask this.
No, I think you're absolutely right. If you go from requiring the 5 code to the 9 code, then you're going to get better compliance, and you're going.
All I'm getting at is if you go to the 9-digit code, it translates. I did 4 or 5 years ago within a system to a geocode, which was specifically kept up nationally to let you know what county, what city, what district within a city sometimes that you were in, so that you could keep up with sales tax. Maybe revenue can address that later. But
okay, well, that's a great idea and a great concept. If we can go to that and be more compliant, that's exactly what we're talking about. So thank you.
Mr. Moon, before you leave.
I'm sorry, Mr. Chairman.
Actually, two or three questions, because you have brought up some tremendous issues, and we thank you for that. I draw your attention back to the slide you had with the general state and local sales tax and about adding the auditor.
Yes, sir.
And Commissioner Graham's here with us today, and he'll certainly confirm what I'm about to say. We've added a significant amount of auditors the last couple of years, and it has made a dramatic improvement in our tax collectability. My question for you is, do you have any thoughts on what the level of diminishing returns might be? I mean, this 1 for 8, would that, do you think?
No, that would not be consistent over a 10-year period, for instance, because you're right. As you get out and start auditing, compliance is going to become more accurate. But even if you get 2 to 1, even if you get down to 2 to 1, I mean, who wouldn't trade $1 for $2? I mean,
agreed. I guess what I'm asking is, do you have any thoughts or ideas on how many new
I can give you an example on the Cobb County side where we audit. We do audits of businesses for property tax valuations where they do the income approach, and we've been doing that for 6 years now. And I think our compliance, our tax assessor Phil Hogshead's in here somewhere, I believe. Phil, here's our tax. He's one of my departments. That's the reason I know this, and he does a great job for us. And he brought us a proposal about 6 years ago that said, if you give me this many auditors, and these are outside auditors we hired at that time, then I will increase your revenue. I think it was 4 to 1, and that was consistent for the first 3 years. Then it dropped down to 3 to 1, then 2 to 1, and now it's about 1.75 to 1. But it's still better than 1 to 1, which is, again, from my perspective, I'll give you $1 if you give me $1.75 every time.
Okay. Second question, go to motor fuel. You mentioned that the state has recently actually changed its ways of collecting its portion of the sales tax, and it's been a tremendous success.
Yes, sir.
We had no idea before quantitatively how much difference that was going to make, adding 100% assurance it was going to get collected at the rack. Your request and suggestion, I think, is a good one. Why not do that for the local collections as well? But my question to you is this. Different counties have different sales taxes. Is there a way to know at the rack where the tax is now collected that this particular volume of fuel is going to go into your county or the next door county or the other? I mean,
we're meeting
how
with
do you
the.
suggest that be done?
We just had a meeting with some of the representatives of the industry, and the distributors weren't there, who are the key people. But right now, the state's method is, I think they readjust the formula every 6 months based on gas prices, and you base that formula on 4 cents, which is what the state collects. And the counties, I believe the counties and cities, and I can't speak for all of them. ACCG is here represented by Clint. And I think Lamar, I saw Lamar here earlier representing GMA. But I think the cities and counties would be willing to accept the state method because it's obviously very successful. And you would basically just take your 4 cents. If you're a 3 cent county, there's only 3 cent counties and 2 cent counties. Okay, there's 14 2-cent counties in Georgia, and Cobb is one of them. And there's 140, how many would it be? 145 3 cents counties. So we think you could just take your 3 cents and convert it based on the same formula, and they could collect that money. And then you could take your 2 cents and do the same thing. The 2 cents would actually be half what the state is, exactly half, since the state's 4 cents. And the main issue is, can you identify where they're going to deliver the fuel? Now, my understanding is they have to have a delivery route with them in order to deliver. Now, Commissioner Royal used to own a distribution company, I believe, or he may still own it, so he probably knows a lot more about this than I do. But if they know where they're going to deliver it, which I'm assuming they do since they have to drive there, then we should be able to work that out, I would think.
That's what he just said. Lastly, you raised some interesting issues about the franchise. You used the term fee. I've had other people call it franchise tax.
Yes, sir.
You also add hidden tax.
Yes, sir.
And I want to make sure I understand completely as a fellow accountant, if you take into account for price setting purposes through the commission,
yes, sir,
as a cost of doing business, a franchise fee, the city does,
yes, sir,
for instance, and the price is increased consummate to that with those assumptions, I think it's your allegation here that people in counties that have that same power company, that same source where the rate has been set, are then paying for that city's franchise fee, yet they have no benefit at all from the city, as I understand it.
Yes, sir. That would be our contention. Now, in Cobb County's case, we would rather the people just not have to pay it. We're not asking for more money. We're just saying we don't want our residents in the unincorporated area paying for something they're not receiving.
Well, as an expert on local governments, both at the city and the county level, the term franchise fee obviously is a defined term in our vocabulary.
Yes, sir.
And it typically implies some service being provided or the use of a name or something. I've been told by my friends in city government that the fees are to compensate them for use of easements in many cases.
Yes, sir.
But I've also been told by folks in counties that the electrical companies, as an example, are not using any county easements anywhere. They tell me that they're not aware of any in the state. Would there be any basis by which counties would charge this if it were anything other than just a tax?
Well, yeah. I mean, I know the companies now in Cobb County. I can tell you specifically in Cobb County, Cobb EMC changed their method and only charges city residents for this now. They don't charge county residents, and they provide services all over Cobb County. They're the second largest EMC in the country, I believe. Now, and Bell South changed their method 2 years ago, and statewide they no longer charge unincorporated people this fee, just incorporated people. Georgia Power and some of the gas companies, things like this, still charge that fee. And but to answer your question, Georgia Power lines and gas lines run throughout Cobb County. I mean, unincorporated and incorporated. So there's no question that they're on county right-of-way, if that's your question.
Any other questions for Mr. Moon? Well, it was a good presentation, and thank you for sharing with us.
Thank you, sir.
Our next presenter will be the city manager of Marietta, Mr. Bill Bruton. He's been with us here in Marietta for 6 years. He's a graduate of Duke and has a law degree from North Carolina. He's my type of attorney, one that had enough sense not to practice law. So.
We're evidently having some technical difficulty over there. They're trying to get it up on the screen, but since you have copies in front of you, I don't want to take extra time away from your day. So I will look over there and see if they think they're going to get it, and if not, we'll just move ahead, Mr. Chairman, if you want with this. Okay, if they come into it, or while we're going, we'll just go right to it. But first of all, thank you for letting us be here today. We really appreciate it, especially from the city of Marietta, the opportunity to be in front of you and to talk about this crucial issue to the state and all the cities and the counties. And I will say, with Virgil's statements that he made earlier, I do agree that we agree on most issues. There's one very big one that he talked about that he stated we did not agree on, and we definitely don't. But on most issues, we do agree that there are a lot of ways that we can have better collectability of our taxes, and we can have, there we go, can have opportunities to collect more taxes for the state and for the city. First of all, I would also like to say we really appreciate having Representative Tumlin representing our area of the state. He has represented us in many ways, and most of you know this, but he actually served on our school board, and he also served on our Board of Lights and Water. So he has a keen interest in what happens in this community and what happens to local government, and we really appreciate you having this hearing here in Marietta. And I want to thank the other senators and representatives for being here. This is a great city, as you heard from our mayor earlier, and a great county. We do have, in the city itself, about 64,000 people that live here on a daily basis. We actually, though, I think it's the second largest commuter area in the state, as far as we're right behind Atlanta, as far as the amount of people that come into the city to work on a daily basis. That's something that a lot of people don't know, but we have an extremely large transient population that comes in on a daily basis that we serve. We're well over 100,000 people on a daily basis in our community. Our total budget, and we're going to go into some different figures here but in a minute, but our total budget is actually about $214 million, and that includes all of our different funds that we have in the city. One thing I will say that the mayor said also, we are very excited about the fact that we are Georgia's first All-America city in 30 years. I got to throw something in and say there have been a couple counties, but we're the first city in actually 30 years. We're very proud of that. We're actually going to have a celebration here on the 4th at 6:30, and any of you that could attend, we'd love to have you. We are Georgia's first city, we believe, for a lot of reasons, and one is because of fiscal responsibility. We've also gotten 2 other awards recently, the Cities of Excellence Award and the Trendsetter Award, both of which are statewide awards that the Georgia Municipal Association and Georgia Trend participate in. And a lot of that is based on the fact of our stewardship of the money that we actually receive in from our public. On the first page that we have in front of you, I just want to show you something as far as diversity of revenue sources. A lot of times people think about local government and they think about cities and they think, well, everything's coming from the property tax. And a lot of times you'll hear at the state level a lot of discussion about, well, everybody's concerned about property taxes at the local level. It's really burdensome. It's something that the local government is not really a great steward of. Well, I just want to show you that that is definitely not the case in Marietta, and I would state that is not the case across the state of Georgia with local government. Our property taxes actually as a percentage of our overall income and our overall budget have been going down. And you can see that we started out back in 04 and we're looking to 06. We're now at 13.9% of our overall budget is actually coming from the property tax. Now, this is not inclusive. I didn't even throw in our different funds that we have that are service and fee-based. So those aren't even up here. This is just the general fund of the city that deals with police, fire, streets, roads, all the different things that we have, non-inclusive of bond funds and other outside revenue. The other key thing to note is how big an issue franchise fees and business licenses are for local government and how big they are for the city of Marietta. And one point I want to make throughout this presentation is as we go through and think about regulating or changing or altering collection methods on these other revenue sources, we are left with one option, and that option is to raise the one nobody wants to raise, which is property taxes. And that's something that I think is missed a lot of times. We run a pretty lean operation, and you'll see that coming up too, but our choice is to go to the property tax if we lose the other fees and revenue sources that we have coming in. If you go to the next page, something I wanted to show you too as far as the SPLOST and why that is so important to local government. In Marietta itself, in our budget, you can see how much money, $134,000, $135,000, and $83,000, that we actually have budgeted for the maintenance of our roads and our streams, as far as stream crossings and drainage issues that we've got in the city. Well, that's not enough. I mean, obviously that is woefully inadequate. The problem is that we cannot go in and find other revenue sources for this, so the only thing that we would be able to do there again is raise the ones that exist currently, mainly the property tax. We have not wanted to do that in Cobb County. We've not wanted to do that in the city of Marietta, and so we have used the SPLOST. Thankfully, the voters have passed that, and we've been able to use it. You can see the huge difference. In the 6-year collection, we're expecting $58 million for the city alone to be able to use in those areas. Now, with the amount of money that we've had previous to the SPLOST, if that was not passed, if you look at LARP and you look at the city funding that we have and other sources, it would have taken us 50 years to pave a road in the city. Every road we've gotten repaved on a basis of 50 years with the state funding and local funding that we had available without the SPLOST. With the SPLOST, thankfully, we're going to be able to do a lot of good road projects, but we're also going to be able to do an awful lot of repaving, and we're going to be able to bring that down below once every 20 years, which is much more appropriate for a city our size. The next issue just wanted to talk about is state mandates, and didn't want to spend much time on this, but just to make the point that if you add up all these different things that are on that screen, the cost to the city and what we actually have to pay to get all of that done is between $2 and $2.5 million a year. Now, we were given all those mandates by the federal government and the state government, but we were not given revenue tools in order to get additional revenue to pay for that. And a lot of times that is lost also as far as the impact it has on the local level and the fact that we then have to go into either cutting services or raising property taxes, which we don't want to do. On the hotel-motel tax issue, I'm going to talk about that in a few minutes and talk about some of the issues that we're facing on a national level. Virgil mentioned it also. But I want to show you the trend that we've seen in Marietta. Now, if you look at that trend, you can see in 00 and 01, well, obviously after 01 with 9/11, we got impacted like everybody did. So we took an initial impact. But the problem is it hasn't come back. And the reason that it hasn't come back is because of this issue that we're facing on a national level right now and a state level, where more and more of the rooms are being booked online by these online carriers, Expedia and the rest, and we are not getting the revenue off of the taxes off of that booking. And so even though that trend should have gone back up, because we actually look at the rooms, and the rooms being filled have gone back up. So total gross revenue for the properties has increased, but our money is not, because more and more of it is going out of state and staying out of state. If we look at construction permits, just wanted to show you on that our revenue sources are varied, And it is, you know, the state does say that we should be bringing in a certain amount of money in order to pay for the inspections that we do. But I tell you, it's kind of tough, especially if you take a look at 04 to 05, to figure out how to deal with a huge increase in construction in your community when the revenue is going to come in the next year from the permits that you've actually got. And so staffing is a real problem with cities because of that flexibility in the revenue that we have coming in. And luckily in Marietta, we are seeing a huge increase in construction. And we are seeing a lot of capability there. Cable TV and franchise fees is one you've been talking about a little bit as far as overall franchises. Cable TV right now is stable for us. It's going up a little bit. We have a huge problem on the horizon, and that is how we're going to deal with voice over internet protocol, and how is that going to affect all of us. Right now, if we look at telephone franchise fee, that has been going down. Well, we know people aren't using telephones less. What they're doing is they're using cell phones more. We can't attach the tax that we do for the franchise fee, obviously, to cell phones. The problem is, if people start going over to cable and start using voice over internet protocol, even though they are using the right-of-ways of the city, and they are using that public property, we may not be able to get the taxes from those individuals. And so not only is this line going to continue to go down, but the one prior to that is going to continue to go down. And that would be a loss of revenue to the cities and a collectability problem for us long term. Interest income, just wanted to show you how varied our rates are at different times. When the economy goes down, just like you're faced with problems, we're faced with problems. We don't have as many different sources of revenue that we're able to tap, so we have real problems in trying to figure out what to do with our workforce. And if you look at, if you look at 04, we had some real problems between 03 and 04 where we actually had to decrease our population. The general fund capital budget, now this is one that a lot of times, and I know there was a lot of discussion last year about this, what actually are the capital needs of communities and of local government, and what are their revenue sources and funding capabilities to get it done? Well, the revenue sources and funding capabilities are very, very limited. We have SPLOST, we have LOST. We do not have, most, but we do rely heavily on the SPLOST in order to do a lot of our capital needs. But as far as the capital budget of the city, if you look from 00 to 07, we're at $1.2 million in a general fund budget of $44 million. That's woefully inadequate. That is not where it should be. It is less than half of what we should have on a continual basis. To give you an example of that problem, a fire truck right now would eat up more than half of that. If you bought an aerial ladder platform, it would be the entire thing. It would be over $1 million. But buying a regular just pumper truck that's outfitted fully, I mean, you can spend $500,000 on that pretty quickly. So half of the money that we're using on total capital out of a workforce of 800 employees could be used on one item. We need additional revenue sources, and I think that's one point that we want to maintain, is that we can keep the revenue sources we have without them being encumbered, but we need additional ones in the future to be able to deal with these issues. Our number of employees, now you may think that in a city our size that has grown as dramatically as we have over the last 10 years, that we would have this exponential growth also in employees. But we actually, if you take a look at that and you look at the numbers from 2000 to 2007, we're going to have fewer employees this year than we had in 2000. That's to deal with all these increases in population and all the increases in development and growth that we're facing. Now, health insurance y'all have problems with. We just wanted to point that out also. We do too. We're having to cut back in that as far as the benefits that we receive because of the dramatic increases we face. But then I wanted to get to what I know you want to get to, which is what are our recommendations, what are our thoughts about what we can do to make this better for cities and local government in general. And in getting to that, one issue I wanted to hit on first, which you see up there, is dealing with the TAD issues, tax allocation districts, which are fairly new in the state. And I know we're all trying to work through those and figure out how to make them relate to the development that we're encouraging with them. But one of the unintended consequences of the law that we have in place right now, and I know there are a lot of very bright people at the state level, a lot of very bright consultants, and a lot of very bright city and local government folks that are trying to work on this. But we have a huge problem that needs to be solved between now and the next legislative session. And that is, what are we going to do about state funding for school systems when there are TADs that exist? Because right now what happens is that you have this state formula that you use that looks at the overall digest for the community and tries to figure out what the taxing capability of that community is, what their wealth is versus other communities in the state. And then the state funding is based upon that overall assessed value of the community. Well, the problem that we've got is the overall value of the overall assessed value of our community has been taken down for the school board and the state, and the local governments as far as the county and the city, because a portion of our community, now about 7%, has been removed from our taxing capability because that money now goes into TADS. So that money is going in to fund the redevelopment projects that are taking place. So the school system, which obviously has the largest tax that it puts on local citizens, and so they're impacted the greatest, they actually end up being hurt by the imposition of TADS because the state takes a look at it and says, well, you know, you've got all this taxing capability, and the school system says, yeah, but we're not getting all the taxes that we have the capability to get because we've agreed to this TAD agreement, and now they actually get hundreds of thousands of dollars less than they should be getting. So that is a huge problem that is going to really cause issues with other cities and other governments imposing TADs and putting TADs in place to encourage redevelopment. And I just think it was one of those that people didn't realize at first when Atlantic Station and some other areas were going forward. Now it's become a real big issue at the state level. The other issues, you know, a lot of people talk about, well, all the revenue coming from the state. There really is no ongoing revenue coming to the city from the state. We have the LARP. But other than that, there really is no ongoing revenue that assists us in the general fund in funding our programs that we have. We did have a funding level that was the Subsequent Injury Trust Fund, which actually kept coming to the city, and we got money this year. That has now been eliminated by the state. And just to let you know the impact on the city, in the last 5 years, we've gone from $100,000 one year to $650,000 this past year, as far as the amount of money that we received from that fund that we now no longer will receive, and so therefore we're having to come up with other revenue solutions for that. Court add-on fees. I know y'all have heard some about this in the past. These are all the court add-on fees. We wanted to list them for you so everybody sees them. We have a huge problem at the local level with court administrators trying to come up with computer programs, working with the state computer program, hiring programmers ourselves, having the workforce in place to take the time to keep track of all these fees, adding them all on to all of the court fines that are issued, and then amassing those and sending them into the state individually, because we can't mass them together and say, here's the total amount to the state. We actually have to go in and say there's so much for local victim witness, so much for indigents, so much for driver's ed, and do all that. It seems like every other year we get another one added on. We would propose that the state go to a simpler method, and that would be to either impose a total dollar amount on a fee as far as a fine, and you could say, you know, whatever you feel is appropriate at that point. You could add up all these fees and just add that amount to it and say it's X amount of dollars. That would be a simple way for us to be able to collect that on each fine, send it to the state, let the state then distribute it to the groups that you want to distribute it to. The other method would be to just tack on a percentage and say that there's a percentage that is added on to each fine, and that amount of money is collected and sent to the state. But that is, you know, give an example of how big an issue this is to us. We had to spend a year with consultants in our offices working on our computer programs to try to get it to the point where we would interface with the state, and we'd be able to actually keep track of all these numbers and be able to send them in. A lot of small governments don't have the time or the money to be able to do that. I know the state has worked to try to help some out with computer programs that everybody can use, but still it is an extreme burden to local governments. Hotel motel, let's see, go to the next one for you. The Department of Revenue set-off debt program, let me hit that one first. This is something that has been discussed, and I know y'all are talking about it. The Department of Revenue right now has a set-off debt program for state issues. They also have a set-off debt program, if I'm correct, on deadbeat dads, where they will collect money from refunds that are coming in from state taxes if there is something filed for a deadbeat dad. Other states, i.e. South Carolina and some others, have a program, and when I was in South Carolina, I participated in this program as a local government, where we actually would forward the debts that are owed us also to the state, and the state would put those bottom on the list. But if there was additional money that was going to be forwarded back from a state refund over to an individual, and the state had been paid and all the other groups had been paid, and there was still money left, the city would get it. And the state would actually take a percentage of that money as an administrative cost. So there was no cost to the state of doing it, but there also was an issue, and they didn't take it, I will say, they didn't take the money from the individual for the administrative cost. They took the money from the cities. So it was money that the city was owed. If we were owed 100%, we might get 97%. And the rest of it would go as an administrative fee. So the individual didn't pay any more money than he actually owed, but the cities actually got it instead of the state sending it back to him as a refund. We would propose that that be established here in the state, and I think that would be an enhancement to local government, allow us to get additional revenue in ways that would not be a new tax. As far as hotel motel tax online sales, we are participating in the lawsuit which is out there right now against the large companies that are causing this problem for us by not remitting the actual tax back to the jurisdictions where the hotel rooms are being booked. That is a real problem for us. It's a problem on a national basis and a state basis. We would appreciate any assistance the state could give us on this to make sure that money comes home to where it should be. Franchise fees, Voice over Internet Protocol, talked a little bit about that. I will say, and Virgil's position and the city's position are a little bit different, as he said on that. Obviously, with cities, we believe that the franchise fee is based upon the use of the right-of-ways in the city. And if, for those of you that live in cities, and definitely all of you are in Atlanta all the time, you see how bad it is when a local utility has to come in and dig up the sidewalks to upgrade their service, maybe even in an area that they've had it before, but they're running it outside the city limits to the county, and they're upgrading service out there, so they got to go back to where their main lines are, and they're having to tear up the entire city, tear up the sidewalks, tear up the streets. Well, yes, they do come back and replace the sidewalk or the street, but as we all know, it's never the same. I mean, DOT doesn't even let you go in and tear something up after they repave it for a certain amount of years, and there's a reason for that. They know it will never be the same once that is torn up. So there is a cost to cities for having those utilities in the cities, and so it is very important that we actually get the revenue that we deserve from those franchise fees, and the cities do bear the extreme burden of utilities being run through most of the jurisdictions. Internet sales. We have a huge problem there, as y'all are very aware of. It's a national problem, also a city problem. We have a lot of local businesses that we're working with that are not being able to compete because of the fact that others are being able to sell the same items on the Internet, and they are not paying any tax on those items. So we've got people that are employing local Georgia folks that are being impacted extremely negatively by these very large companies that are not having to pay the sales tax. So anything that we can do on a local level, on a state level, to assist with local businesses would be of extreme help. Also going to an item that was brought up by Virgil, point of sale. We have found through the audits that we've been able to do through business license audits that when we do, as Virgil said, when we go and perform audits, our revenue increases dramatically. We think that that would be of benefit to the state also if the cities and the counties were able to get point-of-sale information. That would assist us, I know personally, with the city of Marietta. If we had that information, when we're doing our business license audits, we would be able to go in and compare the numbers they're giving us to the numbers that they're giving you and make sure that those two are the same. And a lot of times that may not be the same, and then you're either going to get more revenue or we're going to get more revenue. So other states have actually tried that, and I think Alabama has gone in and tried that, and it has actually increased. This is anecdotal, but it has actually increased the amount of money going to state government and to local governments by allowing that to occur. So I do appreciate your time. I appreciate the opportunity for the city to be in front of you. The key point that we wanted to make is that we operate a lean and mean machine as a city. We don't have a lot of revenue sources. The ones that we do have, we really don't have a lot of flexibility with. We do not use the property tax in a way that is burdensome to our community. We actually have the lowest property tax of any city our size in the metro area. The issue with maintaining our ability to tax as we do without being encumbered, to the ability to have these other revenue sources as we do without being encumbered, and the ability to go after some of these other areas like the hotel motel, internet sales, point of sale, and protection of franchise fees is extremely important to us because, as I said at the beginning, the only option for us if we start losing any more of these options that we have is to raise the property tax, which we do not want to do, and I know nobody else wants us to do either. But thank you very much for your time, and I'd be happy to answer any questions.
Bill, if you got time, I just want to try to get your thought. I know you may be representing Marietta and not GMA, or maybe
yes, sir.
Positions are the same. But is your position that, just picking the cable company, for instance, that they're paying a franchise fee now for having that cable in the ground and driving DSL, cable modem service to a house? Do you think they need to pay you more because they're delivering another commodity over that with voice over IP now? I'm having a hard time, and this is a generalized statement, maybe not the right forum for it, but they're paying you a fee for having that cable in the ground. If they can deliver pizza over it, I don't see how having that cable in the ground puts more burden on the city of Marietta or the city of Alpharetta or the city of Atlanta. So I'm hard-pressed to find out why they need to pay more franchise fees. Same thing if the Bell companies that are delivering DSL service or one FB service over their phone line start delivering pizza or video over that line, they're already paying you a franchise fee. Why does that fee need to increase if they're truly paying you for the use of the right-of-way and the cable's already in the ground? Or should we call this what it is? It's a tax.
Well, as far as what they're paying us currently right now, I mean, I think it's less than they should be paying us, and I guess that's part of the issue, is that the amount that they're paying us versus what they're actually using and the property that they're using in the cities, I think if you went in and actually did an analysis of it, they should probably be paying more.
Well, isn't it true that your city negotiates its franchise fee with those companies now on an individual basis when they come in?
But we have caps. And we believe that the cap is lower than the actual cost it is impacting the city. And so I think that's an issue. And, if we got to the point where there were no caps and we actually started looking at the total cost of each one of the franchisees that comes in, then maybe that would be a point that would make some sense.
All right, so I understand. If I have, Mr. Chairman, if I could ask one more time.
Yes, sir.
Or clear up something. You mentioned TADs. And
yes, sir.
The issues. TADs are tax increment districts, so that, all a school board would lose, or a county would lose, or a city would lose if they had property value inside the TAD was the incremental value on that property.
Yes, sir.
And further, we passed a bill this last session that I sponsored that allowed any of those jurisdictions to opt for what is called a pilot, a payment in lieu of taxes. So, for instance, if that bill had been in place when Atlantic Station went into play, and the school board in Atlanta couldn't get a tax on that incremental valuation, they could opt into an agreement because all the jurisdictions have to sign off before a TAD can go into play. So I'd encourage you to look at that bill that passed last year and look at the language of the pilot that allows a city or a city school system or a county to opt in and get a piece of that increment as it goes on and how they're impacted.
Yes, sir, and I do appreciate that. We've actually implemented 3 TADs in Marietta. I think out of jurisdictions in the state, Atlanta obviously has a lot of them. We may be next. And out of those negotiations that we've had with the county and the school system on that, you wouldn't believe, it took us a year to negotiate those agreements.
I would believe that.
Okay. So the point I guess we're making is anything that makes it more difficult for the school systems to actually be able to make sure that they preserve the base that they have, and I think that's the problem, is that they feel, and we're getting this from our school system, that they actually felt during the negotiations that they were giving away a portion of their base because of the way the law was set up. And so we could have gone a whole different route and we could have tried to negotiate differently, but if you tried it, you have situations where the school board and the county, for example here, where the school board follows the county and says we want the same agreement that the county gets. Because the county has been doing it longer, they've got more experience with it, so then the school board wants the same thing. They don't really have the knowledge base because they haven't done it before to go out and do something totally separate and feel comfortable with that. So we're trying to make it even as far as what the county gets, the city gets, the state, the school board gets by just getting rid of that QBE problem that we have.
Well, just remember, in the process of TAD, that the school board, the county, the city has the ultimate hammer on it. Either one of the 3 doesn't sign on to the TAD, it doesn't happen.
Oh, we had that, yes, sir. sure do understand it, but thank you.
Mr. Chairman.
Yes, sir.
Bill, going back to your general fund capital budget discussion there, you'd mentioned that you were in need of additional revenue sources. Any ideas, examples?
You know, and this is just personal opinion on this, but I mean, there was some discussion at one point about the possibility of a most. Well, you know, that would be an additional revenue source that we would be able to pursue and be able to use. I know there are a lot of negotiations between the GMA and ACCG on that issue and talking about, and I don't want to get into the middle of those negotiations and those issues. So I'm just stating this for myself, basically, as far as that is another revenue option. I think, you know, freeing up some of the ability that we have on the ones that are listed up here will allow us to have additional capability. I know we have restrictions on the school system as far as how much they're able to go up, as far as millage. There are other ways they can do that. The point I was really trying to make on that is we don't have a lot of options at this present time. We'd love to participate in any study committee that you would have that would look at other options that cities could have, because we think that is extremely important in the future. Right now, what we have to do, and we are doing, is we're basing most of our service on service fees. So that the people receiving the service, like sanitation and other things, they're actually paying the freight for everything that it costs to do it. I think it's a very good way to do it as far as business is concerned. But as we get unfunded mandates, and I guess if we want to go to the heart of it, as we get unfunded mandates from the state and federal government, and we don't get any money to support that, that's where the problem is. So as I said earlier in one of those other slides, if we receive $2 million to $2.5 million from either the state or the federal government to implement those restrictions that were imposed on us by the North Georgia Water Authority or whoever, if we got money to go along with that, then we wouldn't be having the problems that we're facing now. Because we can manage what we put in place ourselves, but it's hard to manage what somebody else puts on you and doesn't give you any money to do it.
Well, but going back to your fire truck example, I mean, those fire trucks are for public safety that's
yes, sir.
Protecting and serving the citizens of your city.
Absolutely.
Shouldn't that come from them to protect?
Oh, absolutely. Yes, sir. The problem that we've had is that $2.5 million that we've gotten hit with as far as unfunded mandates has taken away our ability to put that money into capital improvements and things that we want to do, because we're having to regulate because of other folks and what they want us to do, whether it's the state or the federal government. And so we're becoming the regulators on a local level for the large issues which other governments are passing, but we don't have any revenue sources associated with that to be able to get the money in to pay for the services. As an example would be, state law says that we're supposed to take in fees for inspections of construction and permitting, and we're supposed to balance that out so that the amount of money we're bringing in pays for the service that we're delivering. Good idea. But we don't have something similar where we're able to pay for all of the unfunded mandates that are coming down as far as water quality issues and all the rest that are good programs, but we don't have any funding sources associated with them, so we have to draw from the fire trucks and the police cars and everything else we have, or we have to raise taxes. And eventually, what do you have to do in a situation like that? You have to look at the tax situation that you have, and you have to look at the possibility of raising the taxes in order to pay for those local issues.
I'm looking at your list of the mandates, and I assume the $2 to $2.5 million is an estimate for the city of Marietta. Is that
yes, sir. It's and actually we had our folks go through and they pulled a lot of numbers to come up with that, and it's just for the city of Marietta.
When you were doing that and establishing the methodology to quantitate those costs, could you submit to this committee essentially how you did that so we might get an idea what this cost would be statewide?
Oh, yes, sir. I mean, and what I can do is very briefly say something about it, but I would love to provide you something in writing so that you could have that for the committee, and we'll do that. But, on a brief basis, basically we had our departments go through that deal with each one of these issues, and we had them figure what they were having to pay before the mandate was put in place for staffing and operating expenses, capital expenses in that particular area. And then when the new law came into place, what did they have to add in order to make that happen? Actually, it was fairly easy because of basically the way we did it when we had to upgrade to deal with all these issues is we had to have additional budget requests that came forward in order to pay for it. So they were able to go in and pull all of those and put them together. But I'll get you a list of all that, sir.
Thank you. Any other questions for Mr. Bruton?
Thank you,
Bill, thank you very much.
Thank you, Mr. Chairman. Do appreciate it.
If the committee, so wants to, I think we ought to have a 30-minute lunch break. Is that all right with the committee? Yeah, we're going to reconvene at 12:30 for those from Georgia State. And the perspective I asked him to look at is we're also going to look at the people that pay taxes and, how collectability does that. His CPA firm does sales tax returns, property tax returns, helps with tax. So we're looking just for a different perspective. And Raf, you come forward and share with us, we'd appreciate it.
Thank you, Steve. Appreciate the opportunity. As predecessors who spoke earlier, heard some great ideas this morning, and I'm incentivized that hopefully I can make a small difference. I am looking at it from a different perspective, and I apologize I don't have entertainment value with visuals and whatnot. I didn't know that part of it, but so I'll do my best to kind of summarize how I see things, really from a business point of view. My clientele, as Steve said, is primarily mid-market businesses and individuals, and so my practice focus for 20-plus years has been really with primarily income tax, and second to that would be business personal property tax, sales tax, and payroll tax. It kind of follows that. I haven't worked in some of the other esoteric fees and levies that I heard earlier, but I'll try to address those issues. And I'll look at it somewhat theoretically as well as practically in my comments. Business owners are really looking for, I think, clarity and certainty on their tax obligations. I think that there's so much uncertainty in the business world. This is one area that they really would like some clarity and certainty. Most Georgians are proud to pay their tax, and they want to do the right thing, and they want to get it right. They don't want to have changes. They don't want to have surprises. They don't want to have a lot of interpretation of what doing the right thing is. So that's kind of where I'm coming from. And Georgia has a very broad-based tax system because they have many tax systems. We have income tax system. We have sales, use. You go on the list and compare it with other states and some of the tax research services that are out there. You'll see Georgia has most taxes, a little bit of this and a little bit of that. And that's a good thing. And we also have, as I've learned this morning, a lot of layers and a lot of jurisdictions that have to administer different taxes and different pieces of that. So that adds to the complexity to the Georgia businessman in trying to evaluate what needs to be done and how he or she would comply. Georgia is a very business-friendly state. My clientele is appreciative of that. The people that have moved here are appreciative of that. Georgia's made incentives to bring investment into the state, which have been mostly very successful, and there's a few that have been less successful, and I'll point those out. But we're innovative, we're competitive, and we're all here, to keep it that way. Because Georgia has an expansive tax system and is multi-jurisdictional in many ways, that's been a good thing for, obviously, the state's bond rating and keeping sources of revenue from somewhat sheltered from changes in the economies and whatnot. And I don't think anybody wants to change that, and the proposals that I've thought through don't really do that. I think that the system in total is very, very good, and where it needs to be improved is down in the details, probably. However, I'm appreciative of the fact we've gotten rid of a few, in my opinion, nuisance taxes recently, like the intangibles tax and perhaps the estate tax, if you look at it that way. Those have been things to get us off the list of all the taxes that we have. Georgia has or every tax system has a measurement process, and we're either going to measure the value of property on a direct tax basis, or we're going to measure income somewhat on an indirect basis. But it involves a valuation process, and it involves a definition, and it involves judgment and interpretation. And I think at least the Georgia Society of CPAs, we're all about simplicity, advocacy, making the system fair to everybody, and consistent. And I think that's what the Department of Revenue wants, and I know the legislature wants as well. Having said all that, I think some of the definitions in the details is what we need to look at in evaluating really what each tax type is all about and which ones work the best and which ones don't. And again, my focus is really on the business personal property tax, income tax, and a little less on real estate and sales tax, but I'll try to touch on each of those. On the business personal property tax, this is one of the things that business owners will come to a CPA and ask them to do because it looks like a balance sheet, sort of, and so you got to go back and accumulate your fixed assets that are used in your business and accumulate information about your inventories. You know, I think this is, even though the southern states, do this greatly, and the northern states do it lessly, I think it's a good tax. I think it's easy to administer. Of all the things I just named, it's probably the easiest system because it's based on a historical cost basis, and hopefully we have information to easily accumulate that. The biggest problem with it, which I heard earlier from the county commissioner in Rockdale County, is that we don't have, and oftentimes we don't have a statewide definition of how the rules should apply. And some of those statewide definitions, I think, need to happen as far as how property is classified, whether or not, for example, certain types of fixed assets are Category 1 or Category 2. I think the state could do a better job of explaining what those categories are. And the biggest one probably is just some definitional law about real estate, what realty really is and what personally really is, with the aim toward avoiding double taxation. Classic case is where you got a factory and the factory's 5 years old and the air conditioner unit goes out and you replace the air conditioner. And the question is, well, is that air conditioner unit, is it realty or personally, and do you put it on the personal property tax return knowing that the county tax assessor's office will likely assess the realty as an air-conditioned building, and you'll wind up with the potential for double tax and may not really see it or know it. That's a big issue. The other is leasehold improvements, which there's been a lot of court cases about defining that on a county-wide basis, and there's still great confusion, I think, on what a leasehold improvement is, whether it's realty or personally, and who pays the tax on it, who the owner is, how it's administered. And there are a lot of rules on it, but I think they're not applied on a statewide basis because in defense of the local municipalities and counties, there's a lot of interpretation, and there's a lot of differences as to what the rules are. So I think we could improve that, and I'm not sure who should be in the driver's seat, DOR or the legislature, to try to shore all that up, but I think it's a great move in the right direction. As we heard before, I think there's also diversity and confusion on the homestead rules just in general, and there are so many different types of homestead exemptions which I don't profess to fully understand, but I know they're a good thing. I know that there's reasons and special interests behind all of them. What I would like to do is to have perhaps the state take the lead in defining what those exemptions are, at least defining 3 or 4 categories of exemptions, and then letting the local governments perhaps pick and choose which ones they want. And obviously they set their own millage rates, so ultimately they have the final say. But I think that if we could kind of standardize or consistentize the definitions in that area, would be a huge improvement. With 159 counties, and I don't know how many municipalities we have. Real estate taxes are a huge source to the state, and it's also the easiest thing because it's a government-assessed process for the most part, and CPAs don't do anything until we get involved in the appeal process. And that's not all bad, and I would just encourage, again, the use of the internet and local governments to make the information public. Some counties are behind others in doing that, but to the extent you can publish information or the tax rolls, et cetera, on the internet with respect to real property. It would be very helpful, and I think it avoids the suspicion that the system could be inherently unfair or secretive or anything like that. So I think we're moving in the right direction. I don't know if the state can help standardize that process, which many counties are doing now. Another thing which may appear a surprise to you, but I would actually like to see Georgia mirror perhaps some of the license and occupancy taxes that are now in Ohio and Missouri and Oregon and Michigan, some of the Midwest states, as a way to subsidize local governments and maybe roll back other taxes. And the reason I say that is it kind of plays off the income tax laws. Not every one is the same, but many of these occupational taxes are on net profits. And to the extent that there are procedures in place to income tax laws and rules to define what net profits are, and to the extent there's apportionment rules out there to define what sales are in your area, I think it's fairly easy to capture that information. And if you have a Lowe's building store in a certain town, that's one way to kind of capture the information. So you take the company-wide profit and you apportion it back to the city. I think it's a progressive tax, and it to me is easier to be done at the CPA level or when someone's doing the income tax return, et cetera. Another suggestion I have is comment is on the registration process, and I may show my ignorance here, but the website that DOR has is outstanding. It's been huge changes in the last several years to make it easier to read and provide information and make it interactive as far as doing things online. And Secretary of State likewise has a website, and as I understand it, when you register a business for either a corporation or an LLC or something, you go through the Secretary of State's website basically and you get a number, a control number issued through the Secretary of State's office. My thought is, and I'm sure it's been thought of way before now, to share somehow, if that's legal, I don't know, that information with the Department of Revenue, so that's the perhaps first point of capturing a new taxpayer that's tried to reserve a name or establish a corporation in the state into the tax system. The other first step, arguably, is when a business goes to get a local business license. And that process, regretfully, is usually requires somebody getting in their car and going to the courthouse or picking up a form and being very proactive. But some counties are better than others. I live in the city of Sandy Springs, and we don't have an interactive business license yet. You have to get in the car and go down to the city hall, which is understandable. But I think that process, maybe the state at the statewide level can come up with a system to help manage the business license registration process. And at the same time, the Secretary of State's office might be able to share their database with it. Now, I don't know if that's too far-reaching and or out of bounds, but I'm trying to think out of the box here, and that was one thought I had. The other constant theme I have here is that I really would like to see standardization and kind of a push-down approach to our tax system in general. And I think that, again, Georgia's commended for being innovative and fair with their system, but I think we should continue to piggyback off the federal system. I think the 100-plus years of law that we have in our income tax system on the federal level is it may not be totally liked, but it's well established in most areas, and I think the state income tax system should further play off that. I think there's, year to year, I've been doing this for 25 years, there's been you can graph the difference between the federal and state tax base and how the laws add or subtract adjustments to federal income. But I think that, we got closer, and then we get a little further, and we get a little closer, and I would like to see there be a closer trend on a regular basis. And again, that's because business owners want certainty and clarity and what the what the law is all about. And if you're a multi-state business, it's very frustrating and difficult to, to understand the differences in other states. And I think Georgia can be take the lead in trying to narrow that gap. I had a couple of income-specific items, and again, my comments might be directed toward regulatory fixes as opposed to legislative fixes, but nevertheless, I'll throw this out. There should be greater conformity, in my opinion, with, for example, the payroll tax reporting and how withholding tax statements for both employees and for non-resident members in pass-through entities, how that's handled. And I don't have the solution to that, but I think that Georgia needs some money. There's no secret there that the Department of Revenue needs money to modernize their computer system to make that happen. And I think that's in the world we live in now. It's no secret that alternative minimum tax and things like that wouldn't exist without computers. And if we don't have the abilities here in our state to use those computers to capture basic information, like Georgia withholding tax, it's shame on us. I know we're going that direction. I've heard Commissioner Graham say that, and I've seen it, and I know it's happening. I think the state needs to support the department to make that happen faster. There's also a disconnect with the state and the feds on how we do estimated taxes. And again, that doesn't hit the majority of the population maybe, but the middle or higher income people have different rules for paying their state estimates than they do for federal estimates, and I think it's confusing. There may be reasons in the history of the laws that why they're a little bit different, but they are. And most people again want certainty and clarity. They like to have a look back and pay 100% of what last year's tax was as an exception, and know that they're good for the year. They don't have to sit there and compute their income every quarter and go through some of the other things that are out there. And I'll be glad to go into detail about that if the committee is interested. I think the forms probably could help a long way in correcting what I just said. Also with automation, and again, I commend the state for their e-file process as it is now. And I'm sure the department will be talking about that this afternoon. They should, because they ought to be proud of how many people are doing it. And it's making life a lot easier. And I would, as a business practitioner, really, really want to see corporate returns filed, e-filed. And my software provider is struggling and hoping and wishing that communication will happen so that in 2006 we can do that. I hope we can. I think that just enhances compliance and processing. There's a few things, again, that Georgia should spend a little money doing, and that is on the e-file topic in general. If you e-file a federal return, you have a choice whether you e-file with an attachment or without an attachment. And if you have to have attachments, which people do because they're making certain statements to go with their return, or they're providing information, or attaching a brokerage statement to show their gains and losses or whatever. The feds have a way to do that. It's a different form, and what you do is you e-file your return, and then you paper mail the attachments 3 days later. And Georgia has no mechanism to do that. And I know that technology is always moving, and ultimately the feds and Georgia will be able to e-file contemporaneously the attachments. But right now it's creating a real disconnect with Georgia's instructions that require attachments and the fact that we can't really do that when we e-file. So small picky point there, I apologize. Lastly in my wish list, I'll just point out to the group that the credits that Georgia has a number of business credits in the law, and they're all I'm sure well-founded and well-based, and I don't know the history behind all of them, but ultimately they're trying to encourage investment or employment in Georgia, all good things. And also commend the state for changing their single-factor apportionment in the last couple of years. The law actually rolls out in next year, in 2007, I believe, is when it starts going toward the single factor apportionment. That obviously had a cost to that, and it cost the businesses that already located to Georgia and were in some ways enticed to locate here because they were promised business tax credits for new equipment and new employment or new plant. And of course, there's a 5-year carryover rules, all kind of rules that limit the use of the credit. But when we went to a single factor apportionment, all of a sudden the credit became discounted in theory as much as 67%, because you had a dollar for dollar credit that you could use, and now all of a sudden your Georgia income has been potentially reduced by a third because of the apportionment changes. And now your credit, even though it's still out there, it may fade, go away before the 5-year period is up. And I've heard some feedback by businesses that are not going to move out, but there's always a backlash to everything out there. And I just caution the legislatures that that's somewhat of a bone of contention, I think, with making Georgia competitive. There's also discussion in the business community about other states, allowing for the sale of credits before they expire. And I don't know if this is a good thing or not. It doesn't sound particularly good to me, but certain states allow before these credits expire, and if you have no way to use your credits, to actually sell them to another taxpayer. And I think Georgia probably has already looked at that, but I think we need to maybe relook at that. And then lastly, I just ask that as part of this standardization process, both on the income tax and payroll and elsewhere, that particularly in the area of sales tax, that we look toward the streamlined sales tax initiative and look hard at what's going on there, because I think that's one of the biggest areas for revenue gains in the state that could be. And if we can standardize the rules a little bit, I'm not a proponent necessarily of Neil Bortz or anybody else going that far, but it's all about clarity, comfort, consistency, and equity in the system. Chairman, I think that's the end of my comments.
Well, thank you. Any questions for Mr. Dixon?
Sir. Yeah, I would like for you to, I didn't get it when you said it, and it's my fault, not yours, about the estimates. What's the difference between state and Fed?
Well, there's a couple of differences, and part of it might be fixed in the forms, but I'll give you an example. I hate to bore the audience with a lot of tax things, but if you have a multi-state taxpayer, he has credits in other states for the fact he's having to file a Kentucky or Tennessee or New York return. The starting point for the look-back method, which is a safe basis. If you're, for example, if your 2005 liability was $10,000, the general federal rules, you pay 1/4 of that $10,000 throughout the year, and even if your 2006 income goes up a lot, and you pay the balance on April 15th of 2006, you're not going to be charged another payment penalty as long as you paid last year's tax on a level, straight basis. The starting point for that under the Georgia rule is, at least in the instructions and in the regulation and the law, as I understand it, is, or rather the law says it's the prior year tax, whereas the forms indicate it's before the credits. In other words, they're not looking at the actual credits and calculating the safe amount. And it's causing underpayment penalties for a lot of clients that, my last year's tax after all these state credits is only $8,000, not $10,000, and the form doesn't really allow you to do that. It's going to charge you underpayment penalty based on the $10,000 and not the $8,000. And that's very different than the federal law, and I think the Georgia law is unclear in the area, but I think it's the instructions are clear because the form says it's before the credits. So there's a real disconnect there. And obviously the percentages are different too, Chairman O'Neill. They have, and that's okay. I mean, the feds have 110% of prior year, and Georgia has 100% of prior year based on income, et cetera. But I think standardization in that area is very important.
One more question. In your in your practice from your side of things, as you look at it, do you have any suggestions for us that deal with collectability of legitimately owed taxes? Things that you think that you've seen maybe that could be done better, either legislatively or through the department, or at the local levels to help the local governments collect those taxes which are legitimately owed. The statement was made early in the inception of this committee that prior to this last recession we went through, we had over $1 billion of uncollected yet legitimately owed taxes, which would have certainly allowed us to almost make no draconian revenue cuts. We've just been collected what was owed. In your experience as a practitioner, do you see areas that we're constantly or over and over defrauded, that there might be some safeguards or something that could be put in the law that would help us better collect legitimately owed taxes, so that the ones that play by the rules maybe could pay less? That's one of the missions of this committee, is to try to, can you give us any suggestions in that regard?
Well, I appreciate the question, and I know that's why we're really here. I think that compliance, part of it is education in the process. I would like to think that taxpayers that use CPAs are using people of the highest and most educated abilities and are doing the right thing. But I think there's a couple of tax gaps that, this is my personal opinion, that need to be plugged. And I'm not saying it's worse than what it was in the past. I think the gap actually has, this is my opinion, has narrowed. But the two big areas we mentioned at lunch today was actually the self-employed individual taxpayer that may not be on the rolls, or that may not be knowledgeable, or may have bad advice, or whatever reason. That's one big gap, no doubt about it. And the other big gap, I think, is internet, interstate sales. Those are the two biggest gaps. And I think the interstate internet sales gap could be or should be enforced through the employer or seller's side. I mean, I think, in fact, most taxes, to the extent they can, in my opinion, be withheld at the source or have the employer withhold those taxes, is the best fix in every case. That's a little harder to do on the self-employed person, and I don't have a suggestion today to necessarily fix that. But I think in modeling any system, I'm in favor of, and I know this is, I guess, pro-government, but I think, again, with computers and technology today, I think to the extent you can capture income at the withholding agent, whoever that might be, is the best answer. And you got to have the facilities to cross-check the withholding agent to what's ultimately filed, if you require a filing at all. To me, that's the answer. And I don't think, again, in this world that we live in now, that people are necessarily afraid of that. I mean, we know now you file returns on the computer. You do online banking. There's so much of that we still have to allow paper, because not everybody can have access to computers. I understand that, but I think the vast majority do now, and that's the direction I would encourage.
Can I ask you one on the, say, a non-compliance, I don't know if you run into much, taxpayer, they're 3, 4, 5, or 6 years behind. Would it be easier for them to be on the tax rolls if we could be a little bit more forgiving? I mean, if somebody's 5 or 6 years behind, they can't even begin to get started, usually. I think we ought to have any kind of amnesty type thing, or at least once, or anything to motivate them.
Well, amnesty can be a dirty word, I know, depending on who says it, or it's a good word. And
we got a responsibility.
There's a lot of programs out there, and a lot of states have done that. We've done that, and they call it different things and do it at different times. And I think, in a broader perspective, you can look at the immigration laws that are being thrown around, whether amnesty is right or wrong, but the ultimate objective is get people on the rolls and get compliance. And I think that, at least in my practice, when we come forward to the department and say we have a non-filer, they have been responsive to getting them on the rolls and being lenient perhaps on some of the penalties they could otherwise charge. I don't know how I think you throw that out there at the same time you come down on the compliance and enforcement side. I think they can go hand in hand. If you do this, and it's been done before, but I think it's part of the education process, you just keep doing that.
Any other questions?
If I could follow up just brief, I know I'm probably asking too many. I've had several people, question me or inquire, I guess, of me about the state income tax calculation method versus the federal one. Do you care to offer an opinion on, where you start, after you have your number on your federal return and then you go from there? I mean, that's something that has been created through statute in Georgia over the years, not the Revenue Department's fault, not necessarily any individual's fault, but do you care to offer an opinion on trying to simplify that to better match the federal form, without regard to revenue neutrality? I think that's something we want to try to do, but, what would that save in time and dollars to the average taxpayer in Georgia?
Good question.
An opinion on that?
Well, I do, and I think from a business point of view, hopefully I made it clear that I think that I want to narrow the gap. And Georgia does have a conformity posture, and we attempt to conform with federal as soon as the laws come out. Sometimes there's a 1 or 2 year gap, and sometimes it's a permanent gap. But my recommendation is that for business income that we narrow the gap, that there not be differences. If we have to change the revenue a little bit by adjusting the rate, that's my opinion. Maybe we do that. For individuals, I would have a slightly different answer. I think that Georgia has to take care of its elderly and special disadvantaged people, and I think a lot of those adjustments are entirely appropriate, and they're fairly easy to understand, and arguably deductions and exemptions are easier to understand than credits, because credits are hard to calculate. I mean, they sound good, but in my humble opinion, I think those exemptions we have for retirement income is well worth it, and it's not a problem. It's not an issue. Perhaps DOR could do a better job, maybe, of matching up birth dates and making sure it's properly enforced. But good question.
Any other questions? And we thank you for taking your time and sharing with us.
My pleasure. Thank you.
Thank you. Our next presenter is Dr. Wes Clark, Associate Director of Research and Policy at the Carl Vinson Institute of Government at the University of Georgia. Dr. Clark.
I think I have a PowerPoint. Okay. You have Thank you, Representative Tumlin and Chairman O'Neill, for the opportunity, and I'd like to thank Senator Hill and Senator Harp as well for the opportunity to address you this morning or this afternoon. My name is Wes Clark. I'm the Director of Research and Policy Analysis at the Institute of Government at the University. And I'm going to talk generally about revenue collectability. A lot of the people who have already spoken have talked about particular problems with revenue systems or particular sources of revenue. They've talked about getting the revenue to the correct unit of government or similar problems. I'm going to talk a little bit about collectability generally, and what we see as researchers are issues of collectability. Local governments in Georgia, as elsewhere, rely primarily on taxes of various sorts, current charges for services, licenses and permits, and intergovernmental revenue coming from the state and federal governments. Local governments have generally relied heavily on the local property tax due to tradition, but also due to its stability and the amount of revenue it can generate, since such a large part of the wealth of a jurisdiction is in land and improvements. The general sales tax is historically a state revenue source, but nationally it accounts for about 4% of local government total revenue. Here in Georgia, it makes up about 20% of county revenue and about 9% of municipal revenue. Attached to your handout, the last 2 pages, which I don't have on overheads, give some statistics. It's the 2004 averages for various revenue sources for Georgia counties and Georgia cities. These data came from our Tax and Expenditure Data Center at the Institute of Government. The data were provided by DCA. Selective sales taxes in Georgia account for 1.1 and 2.6% of county and municipal revenue, respectively. The motor vehicle tax is about 3.4% of county revenue. The income or payroll tax used in some states is a minor revenue instrument at the local level, but it has received increased significance as some central cities have sought to replace lost tax base. Current charges are generally sorted into 3 main categories: licenses and fees, user charges, and charges associated with monopolistic activities. A license is purchased to permit the user or the holder to engage in an activity that's otherwise prohibited, such as operating a motor vehicle, hunting, or fishing. The user does not receive a specific government-provided service, although the activity is often made possible or more beneficial through government programs that are sometimes funded with the revenue from these sources. Local governments nationally began to rely more heavily on user charges in the last quarter of the 20th century when tax protests led to the revolts that we're all familiar with beginning about 1978. Most of the difficulties stemmed either from poorly designed or implemented property assessment programs or from rapidly rising market values in some places. In any case, government turned to user charges to replace lost revenue. User charges have a number of benefits that help local governments operate more efficiently and equitably. The services funded with user charges must have 2 characteristics. They must have benefit separability. That is, we must be able to show that the user alone receives the benefit. And second, the service must have some means to attach a fee to it. Some mechanism for calculating an appropriate fee must suggest itself from looking at the service. User charges help local governments gauge demand for services by forcing the market to arrive at an equilibrium price based on supply and demand. This may ultimately allow jurisdictions to provide a greater array of services. The problem with user charges is that there is a trade-off between this efficiency and equity. Greater production of some services, such as library book lending or youth sports programs, is desirable. Placing a fee that recovers the full cost of the service may cause these services to be produced at less than optimal levels. However, one could also argue that lower income residents who do not use the service benefit when the full cost is recovered through a user charge. The issue is to determine the proper mix of goods and services offered and where we should apply fees. We should note here that inequality and inequity are 2 separate concepts and often are unrelated. Inequality is a mathematical concept. It can be measured, whereas an inequity is a philosophical issue and has to be dealt with in the policy arena. Again, the 2 are not synonymous. And finally, utility fees and franchise fees associated with monopolistic activities that are highly regulated. The collection mechanisms used for these services make it difficult to avoid payment. Intergovernmental revenue collectability depends largely on the capacity for grant writing and knowledge of grant programs that are available. Some, such as the Community Development Block Grant, are fairly straightforward and simple. Others are much more complex and require tremendous skill and effort in applying for those federal monies. If you look at the statistics, the operating budgets of Georgia cities and counties, intergovernmental revenue makes up a very small portion. We're not including the pass-through money that comes in, but that goes directly to the operating budgets is fairly small. And there's a great variation across Georgia's cities and counties, so it may be useful to to look at this area for collectability. There are two major components of collectability. That is collection costs, which is made up of compliance costs and administrative costs. And then the other components are avoidance and evasion. For most taxes, collection costs are largely borne by the taxpayer or the business that remits the tax. The sales tax, taxes on utilities, and franchise taxes are determined by the taxpayer or remitter according to state law or local ordinance. When calculation is simpler, compliance generally improves, and we've heard that already this morning. Administrative costs for these kinds of taxes, that is the cost borne by the government, are generally in the area of compliance monitoring or some type of auditing for enforcement. And mentioned already, the quickest way for audit compliance is to computer match business licenses with tax remittance, and also to check for trends so that the report will provide exceptions to general trends for individual taxpayers. Administrative costs are greatest for the property taxes that require the government either to prepare a tax digest for real and personal property or to maintain records of tax owed, as in the case of the motor vehicle tax. Compliance costs for the property tax are generally low for the taxpayer. In some cases where the mortgage uses an escrow, the compliance costs are really non-existent. Again, a simpler tax code will generally result in greater compliance. Looking at studies that have been done of the administrative costs, and these are just the administrative costs as a percent of revenue for various income sources, we see that administrative costs vary from about 0.3 or 0.4% up to about 2%. The estimates that you see here for motor fuel tax include the cost of checking the accuracy of pumps at the service stations, convenience stores, and elsewhere. And these are based on a number of state studies. I can't tell you if Georgia was included in any of those particular groups, but a number of studies have come up with these averages or ranges. One study of income tax collection, and I point this out simply because of someone, Mr. Dixon, said that most people want to pay their taxes, want to do the right thing. And in fact, in this study, this was a study of income tax collections in New Jersey. In 1979, voluntary compliance resulted in 97.23% of the tax collected. The study did not report the amount of the proportion of the tax owed that was collected or an estimate. But you see these other activities, field office audits, special action enforcements, and so forth, produced a relatively small amount of additional revenue. And notice here that we're not talking about the cost of conducting these special activities, but the amount of additional revenue that those produce. The estimates of $1 spent results in $8 collected that we heard earlier from Mr. Moon, or even the $1.75 for $1 is significant. But we are talking about a very small proportion of the revenue that's collected. The collection cost for current charges is almost entirely administrative. The government must design and implement the system to produce the revenue. In the case of utilities, meter reading and bill preparation make up a significant portion of these costs. In others, such as registration fees, hunting and fishing licenses, etc., motor vehicle registration, the cost to deliver the license and collect the fee may be very small or it may be quite large. It may be only a portion of the duties of a particular employee, or it may require a significant staff. In any case, the cost of processing payments and making bank deposits in this case must be considered because you're collecting revenue $10, $15, $20, $40 at a time. Tax avoidance and evasion is an issue at all levels of government. For local governments, taxes are relatively difficult to avoid with the exception of the sales tax. Avoidance by making purchases through the internet, through mail order, and we've already heard that discussed here today, and I think that will be an issue for a number of years to come. A number of states have joined these consortiums, and from an equity standpoint, equity for retailers who collect the sales tax versus internet and mail order sellers who don't, and even variation across internet and mail order sellers. Some collect and some don't. Avoidance of current charges is relatively difficult. It's fairly simple to exclude persons from the service without payment of the fee. Tax evasion is more of a problem for income taxes at the state and federal levels than for the taxes collected by local governments. However, while it is difficult to hide property, it may be hard to keep assessors unaware of improvements made to the property. The issue here is consistency in the enforcement of the building permit system and implementing a proper assessment program for reevaluation on a periodic basis. Evasion of the general sales tax collected at the point of sale is difficult if we have proper reasonable audit mechanisms in place, and we've already heard requests today for additional audit, and I would second that. The evasion of licenses and permits varies a great deal. Residents may engage in activities that require a license until such time as they are caught and fined, which means that enforcement is the only means to increase the collectability or the collection rates of these forms of revenue. User charges are more difficult, as noted earlier, with regard to avoidance. The same is true for evasion. The excludability of user charges makes avoidance or evasion very difficult. To summarize, the collectability of any revenue source is determined by the cost to collect and the ease with which payment can be avoided or evaded. For local governments, the move toward greater reliance on user charges and less reliance on the property tax has likely meant no real change in administrative costs, an increase in the variety of services offered by local governments, and mixed results in the trade-off between efficiency and equity. And I will conclude my comments and be glad to respond to questions.
Wes, the last remark you made, you talked about the fact that the shifting of charge for services from property taxes. Is it not true, though, that most of your municipalities and a lot of your county governments really have no alternative because of the political ramifications of property tax increases are so onerous versus the idea it's much easier to raise the fee for collecting garbage or water or whatever else?
Yeah. Well, a couple of things about that, and if you look at Georgia's the property taxes for counties and cities here in Georgia, and I know that Manager Bruton said that Marietta's property tax was going down as a percent. It was down under 14% of the city's operating budget. If you look at Georgia's property taxes from about 1985 to 2004, for cities it has varied quite a bit, from about 13% up to about 17 or 18% as an average over those 20 or so years. For counties, it's been very stable at about 40% as an average. So the cities are using the property tax as it's traditionally been used, as a balancing mechanism. So we do see fluctuation in that property tax. For user charges, we did have a period of time beginning about 1978 where cities and counties were very quick to implement additional user charges. Now, the administrative costs may not have gone up for implementing those, for collecting that additional revenue. During that period of time, I was in the lumber business, and I had more than one builder, contractor, complain about, they used to charge me $50 or $75 for a building permit. Now I go in and they want $75 for the building permit, and they're going to charge me $20 for the foundation inspection, the framing, the electrical, plumbing, and the final inspection. So now it's another $100. So we didn't add an administrative cost to collecting that. We simply collected more and for more different things, and we detailed it in that case. I'm not sure if that responds to your question, but I think if we want to keep property taxes low, going to user charges, and again, I would point out that user charges should be viewed from both an inequality and an equity, from an equality and an equity standpoint. Yes.
Do you know of any studies, or have you all at the Institute done any studies on timing issues as far as assurance of collectability of taxes? For instance, what I'm asking about is, in a wage situation, you collect the withholding instantaneous, contemporaneously with payment of the wage. Estimated taxes, we give people 90 days or more, depending on the federal rules. But more importantly, in fiduciary taxes, like our businesses that collect sales tax for us, that we pay a fee. Have we looked at the efficacy of maybe weekly or daily deposits of those fiduciary accounts, where they're not used as working capital and so forth in business? Those kind of things. Do we have any statistical basis for what benefit or detriment it might be to us, or cost of compliance? To balance that again?
Of course, time is money, and so the quicker we get that, I know that a number of states have implemented in the last 10 to 15 years more rapid deposit through the use of electronic funds transfer, more rapid deposit of funds for the sales tax and other collections that are made on behalf of government. I can't point to any particular studies that look at whether or not that faster remittance has resulted in greater compliance. But it's an interesting question. I think one worth looking at.
Dr. Clark, could I ask you, on your chart we had collection costs, we had 97.23 was compliance, but part of that would be greatly augmented by the threat of an audit.
I'm sorry, excuse me?
You had voluntary compliance was 97.23%.
Right.
A lot of that is greatly augmented by the threat of an audit.
Oh, right. The threat of an audit is yes.
And I I hate to admit I have casual reading in tax matters, but I've always understood that 89 to 92% of people comply with taxation in the federal government. Are there any statistics for Georgia or for income tax or sales tax? How much the big universe is and how much is actually collected?
I know that in most cases we see collection rates for the property tax 95, 97, 98% are not uncommon. For the sales tax, I don't have any numbers on the top of my head. My colleagues from Georgia State, from the Fiscal Policy Center, may have some studies, but I'm not aware of one that's been done in Georgia of that.
I was talking even beyond collection, just plain, not even filed sales tax and not even filed Georgia income tax. I guess the federal's 90, 92%. It wouldn't be hard to surmise that same ratio might be for states.
Since the state income taxes are piggybacked on the federal, I would imagine that the compliance rates are very similar. But I understand what you're saying about the threat of an audit. My dad kept the paddle on top of the refrigerator, so it works when we get older too.
Any other questions for Dr. Clark? Well, thank you very much for sharing with us.
Thank you.
Now, today I'd like to hear from Commissioner Bart Graham. He's been much aligned and played today. Bull-eyed.
Not allied.
Equal time.
Will the commissioner yield the question?
Go quick.
It's not been any worse than I usually get from your chairman, so it's okay. Thank you for having us today. For those of you who don't know, we have some people from the department with us as well. Ed Maney, who's our Deputy Commissioner for Tax Compliance, Frank O'Connell, who's with the policy group, and Mac Chandler, who is with our government affairs efforts. What I thought I would comment first, based on previous conversation, with some of our current practices, some of the things we have on our agenda that we're implementing, and then some needed tools, and some of those things that are most effective in what we do in compliance. I think most of you have heard some reporting on our revenue collection initiative that was started a little over 28 months ago, when we determined that we had $1.6 billion under lien that was not being pursued in the department. We've collected roughly $240 to $250 million of that money. Those programs involve the alcohol licensing initiative, the Treasury offset program with the IRS, the work we do with private collection agencies, a call center that we have. It's a one last chance for people to avoid going through the private collection agencies. That's been very effective. The internet listing of our collection efforts on our website is effective. The general income tax delinquency program, and then tax incentive examinations, which is just it was phase 4 of our 4-phase initiative, and that's just underway, where we're doing more scrutiny of what people are claiming on their incentives. I'm going to jump ahead to a degree and talk a little bit about the alcohol licensing program and how that can be an effective tool. When I first came to the department, because we kept having recurring instances of default or failure to pay by certain license holders, I finally asked the question, how many or what percentage of license holders were getting a new license every year with a delinquent tax obligation? And it was roughly 17% of all license holders were getting new licenses. And so in that 1 6-week period in the 2003 to 2004 transition, we held the licenses until they paid up. And over $11 million came in 6 weeks' time that we didn't have to chase down. Now, the administrative process that would collect each one of those one at a time would have easily taken us 9 months to a year to do that. It's very effective. The industry has been very good to work with us. The wholesalers have been very good in that process because they knew that we were going to hold them accountable too if they delivered outside their regulation. So one thing that we would like to see, I think would be helpful, is to expand that platform, if you so desire, to other business licenses. That you couldn't renew your business license, for whether it be a business license or an individual practitioner's license, from 1 year to the next, unless you pass a tax check along the way. And you'll still have some evasion and non-compliance where people just get aggressive on the return, but at least they'll file. And once they file, and they file a fraudulent document, that's far more egregious than not filing at all. We find that in every major group that we've looked at, and I commented on this in an earlier committee, that where we've looked at it, we haven't pursued them all because we're trying to be equitable in our enforcement efforts, that it's not uncommon at all to have a greater than 10% non-filing rate in specific industry groups. And the ones we tend to look at are professional groups. They're not just random employees and employers. And every time we do that, it yields significant results. Another thing that would be helpful to us is you can register your business online with the Secretary of State, but often they will accept it with only a registered agent. We would like to propose legislation be enacted that requires that the Secretary of State can't take that registration unless the corporate officers' names are provided, so that we then can go after the corporate officers in successor liability cases falling onto that. I reported at a recent committee meeting that we had an exercise at the Savannah and Atlanta airport in which we ultimately got over $1.5 million from the same taxpayer who had 7 or 8 different business interests. But as you investigated each one of those business interests, 90% of them only listed a registered agent. So going to other corporate officers to help fulfill that obligation is far more difficult. And that would be a simple process installing. And I'm happy to entertain things where we're forced to do things or we're forced not to accept certain things unless we perform too. So I'm not just suggesting we put more burden on the Secretary of State, but it's a pretty simple process that would add a great compliance tool for us. Another part of our job that's going to add a tremendous amount of help to us is our electronic transformation of the department. Taking sales tax returns and withholding tax returns online along with the payment simultaneously will speed our enforcement and compliance efforts. It would also allow us to distribute the sales tax money back to the counties more quickly. We just went live with the sales tax initiative that we have legislative authority to go forward with this year, and 1,500 taxpayers paid electronically and filed electronically. That money's already been matched up with the return, and it'll be eligible for the next distribution rather than in the old practice it'd be another 45 days or the next month's distribution. The dilemma we have right now is only those taxpayers that have an obligation of $5,000 or more per tax payment period have to do it electronically. Now, we're offering it voluntarily to people. The state of Alabama's started at $2,500, and they've already dropped their mandatory filing requirement to $750 per payment period. And again, that 1,500 returns, obviously gets the big employers like Walmart and other big retailers, but we are sending out over 120,000 sales tax returns a month. Part of the way we're trying to improve our business, too, is 60% of those paper returns come back to us with errors that we're doing the error resolution on. By doing it electronically, the error will have to be reconciled with the taxpayer before it's ever submitted to the state. That way we can shift budget money from that effort on error resolution, which should be handled at the taxpayer level, to other enforcement efforts, whether they be new auditors or wherever else we put them. We continue to do a lot in education and guidance for taxpayers. We're clearly trying to instill within the department that this is not a gotcha operation. We can't allow people internally to get overzealous. We're fully committed and believe that there's plenty of tax revenue around to meet the budget philosophy that this administration and this General Assembly seems to have, with just greater compliance for those that we know aren't filing, and the amount of time and people it takes to pursue one and to get one to pay is great. The operation that I referred to at the Savannah Atlanta Airport, that took 30 people to go through that exercise. It yielded great results in a matter of 72 hours, but it still took 30 people. So we want to do more in that realm rather than squeeze an extra $10 or extra $100 out of somebody who's filing every year. And part of that is shifting the culture of the department so that we don't have people in our customer service area get overzealous with people and disqualify things where the documentation is otherwise available. Another initiative on the electronic transformation of the department that the General Assembly has been kind enough to help finance is what we refer to as our CTAB project. Some people think that that's just buying laptops for some of the tax agents and for the alcohol and tobacco agents. But what that project does, along with the software, is allow agents to go to the field, do compliance checks, and settle tax obligations with taxpayers while they're in the field. They can see real live data from the department while they're there. We first saw that when I was out with alcohol agents, and we'd go to do an enforcement, and the taxpayer would produce a return or a payment that we didn't have in our system. This way, though, if we go and find noncompliance, a citation can be created on the spot, a tax obligation can be paid and met in the field. That immediately gets downloaded into our base system, and that will stop other notices from going out if we have a backlog of work, and we are constantly with a backlog of work for as great as size as Georgia has grown to. The most effective programs we have are the Treasury Offset Program with the IRS, our internet listing, and the education and guidance that we do. We probably do 35 to 40 seminars around the state every year. They're generally very well attended. They're generally in industry specialization groups, so it's not something that people gravitate toward or see all that publicity about, but they are well attended. One of the most effective compliance tools that we could get that some states have adopted are data warehouses, which are part of an integrated tax system that allows you to see the relationship management of a taxpayer, not just the company, but any related companies or corporate officers or commonality of boards of directors, where whenever you can put pressure on people, they generally will avoid a public disclosure of their problem. And most people that you deal with on a regular basis, and most of the evasion tends to be the result of individual action, not the company action. Somebody directed it, some officer was responsible for it or irresponsible for it, And when you put the pressure on them, they'll solve the problem if there's a way to get it. Our biggest evasion is in sales tax misappropriation, withholding tax misappropriation. Often it's due to lack of governance within the organization. Often it's due to, occasionally it's due to embezzlement or fraud. But in the past, there might have been some leniency on that if somebody came and claimed embezzlement. But our standard now is if there's not criminal or civil litigation to go with that, that it's not important enough for Georgia to give grace to that organization. It can't be because somebody's married to a deacon in the church or we're in the same Sunday school class. There has to be the litigation there that somebody's being pursued before we give the leniency. With respect to the data warehouse, the states that have implemented these type things, you can spend any amount of money. When I first came to the department, people were talking about an integrated tax system that could cost $250 million. There are other market-based systems that you can do that aren't customized to your state that are far less expensive than that. The data warehouses component itself has been estimated in Georgia would be a $20 to $22 million implementation with a 3-year return on investment of over $30 million. To some degree, we can collect that with just our cost of collection fee, allowing that money that we get every year to be dedicated to fund this project rather than that money going back into the state treasury. Some of the other things that were discussed earlier today and that are on our radar screen, additional auditors is always helpful. But regardless of what the diminishing financial return is, I think an industry standard might be anywhere from 1% to 3% of any particular group that you want to audit each year would be statistically significant, reasonable standard to audit. We're not interested in having enough auditors to squeeze as much money as we can get out of people. But we also have to have the positions to go with the money. Yes, as commented earlier, we have been appropriated some money in the last 2 years to add auditors. Those auditors have been added. They are generating significant results, and at the next House and Senate Joint Appropriations Committee meeting will report on some of those production numbers. But we haven't been given new positions in the department through the process. So what we've had to do is take positions out of other divisions within the department to fill those positions. That has cost us on the customer service side, but that's a decision we made that we felt was in the best interest of the state. The other things you can do is you can consider raising the minimum filing requirement. In the last year, we recommended we bring the out-of-state or non-resident filing requirement down to what the current in-state requirement was. But there is a certain amount of activity that goes on for little revenue. That's a consideration. I'm not necessarily a proponent of it. It's just mathematically you could reduce our cost of compliance and collection by doing that. We want to continue the electronic initiative and any support you'll give us when we bring the ideas forward about what we're doing, why we're trying to do it, what level we want to set it at. We know that everybody didn't have access to a computer, but I'm pretty convinced that any business that does $1 million a year in revenue has a PC that we could get hooked up. There has been some talk of point-of-sale access with retailers statewide. From a business standpoint and from a collection standpoint, that's a great concept, although I'm not necessarily a proponent that state government needs to see every transaction that every business does every day and who they're doing it with and how they're doing it. That's one of the fallback problems, I think, if you went with a point-of-sale operation. I mentioned the corporate officers. Again, the difference is requiring the Secretary of State to not take the registration unless the officer's names are given with Social Security numbers. It's kind of optional now. The business is required to have one when they incorporate, but they don't have to give it to the Secretary of State. Again, the tax checks on any type of business license, any type of professional group. We do it on state employees to get the license renewal. It's obviously a very effective tool. We can do it in an intrusive way. We can do it timely. One problem that we have with collectability is frivolous refund claims. There are practitioner groups that's what they specialize in, and it's very common that 95% of the refund claim will get rejected. Ed Maney's group in the last 18 months has rejected over $260 million worth of refund claims that are not in litigation because the taxpayer thinks they're right and we're wrong. If people think they can get away with it, they'll try to do it. It's the same reason why you have state troopers and police on the highway. not ever going to stop everybody from speeding, but if you're not ever out there, they're going to get fairly aggressive. One thing that would also be helpful is more enforcement power with respect to litigation and felony provisions. We passed one last year with respect to sales tax, and that will be very helpful to us. And again, we're not interested in trying to charge somebody with a felony who makes a mistake on a tax return, but you know it when you see it, when there's fraud and a consistent egregious activity. And we're only interested in prosecuting the worst of the worst. Like when we find in the tax preparer in Muskogee County has the Muskogee County School District school list with all the student Social Security numbers and all the parents and their Social Security numbers, and when the taxpayer walks out of the office, they change all the exemptions and deductions and then file the return electronically that night after the taxpayer's left. So the taxpayer thinks they've done the right thing. The tax preparer has not done the right thing, but our first point of collection is going to go back to the taxpayer. We have increased the initiative to go after those type of preparers. Some conversation was given earlier with respect to an amnesty program. I'm not a proponent of that. I think that's an excuse for us not doing the job that we should be doing within the department. If you give us the tool we need with respect to corporate officers and the Secretary of State or with business licenses, you'll affect the same result. We'll know who to look for and where to look for them. We're doing a lot more work now than we have historically at crossing W-2s. One thing, the Treasury Offset Program, the only thing it will do is if somebody files federally and they don't file state or give different information, we can solve that. But if they don't file either return, the only way to get to them is through some type of registration process or through crossing the W-2s, and we're doing a lot more work in that regard. And with respect to the amnesty, I'm not a proponent of that because I still think there are things that we can do to fairly and equitably enforce the tax laws without doing that, and you will have people hold out for the next amnesty. Some of you will know that there were some very visible people who had some tax compliance problems. 2 years ago, they paid us $120,000 between the two of them, and both their tax obligations, if I remember correctly, started at $4,500 or so and $6,000 or so. The rest of it was penalty and interest that accumulated over time. Now, my number might be off there, but it was on a magnitude of 5 to 6, 10 times greater than what their tax regime was, and they were just holding out for next amnesty. And they're both habitual non-filers or slow filers. A lot of people have gone to where they've become so familiar with the process, they know how far they can hold us out until we can file a lien on them or garnish their wages. And so unless you're tracking them day in and day out and keeping the statute running and doing it timely, you're always going to fight that battle. So that's why more enforcement initiatives are helping the process. With respect to the insurance premium tax, this doesn't have anything to do with collectability other than to say that I think we have been fairly successful in showing our resolve in collecting what is owed by people in an equitable amount. I don't quite understand why that's in a different State Department, other than the fact that it's called insurance. I mean, the function is the collectability of it, and I'd be happy to entertain anybody's desire to move that to the Revenue Department. It would help in the financial reporting every month as well. And then there was some conversation on the motor fuel tax at the local level. The challenge of collecting the local portion of that is that everybody's retail price is different. You have to come up with some kind of average on that. I'm fine to do it. I'm fine to convert it to an excise tax. We did do a gas tax suspension at the state level back in September, so the state wouldn't have a one-time benefit from high prices. It would be very simple to convert it to an excess tax. Our cost of collection and compliance would go significantly down. And I'm also a proponent of moving to a tax at the rack, at the refinery level. Our database with gas distributors has 600 to 800 taxpayers in it, somewhere in that range. At what's referred to as the rack level or refinery level, we'd go from chasing 600 people or firms around a year to chasing 15 to 20 firms around per year. That obviously has a significant tax compliance cost reduction attached to it. Thank you for letting me be here. I'm happy to answer questions.
Mark, do you have power to compromise when you have efficiencies such as the one you alluded to where the $4,500 to $6,000 penalties and interest landed up to $100 plus thousand? y'all compromise on the interest penalty?
The interest I can't. On the penalty I can. The interest requires some type of inaction or fault of the department to do that.
Could you not be better? Could you not increase revenue if you could compromise those kind of things? Would it help?
There was a time that it might have had a one-time effect, that would have been helpful. But I think in the last 24 months we've worked through that time. If we're doing our job on a regular basis, there's not a need to do that. There is an offer and compromise program that mirrors what the IRS does, that we allow some people to participate in, but we don't allow people to make a business practice of just taking taxpayers through that process. There has to be some type of need, some type of hardship. There's now dual accountability and dual authorization that didn't exist in the past, so you could window shop to get through that process. The standard is if someone can't take care of themselves or solve their problem, or the state would be worse off, then we'll give them some latitude. But if somebody just wants to start over, but they're perfectly income producing and have the wherewithal to pay it, and they're still a member of the country club and still have a house in Lake Burton, it's just not happening. But we have people try to come through that program that
My
meet those.
question was, do you have the capacity to compromise that by law? I mean, is it something that you ought to have?
Yes.
You do have the capacity to do it. Y'all choose not to, I understand.
No, we don't choose not to. It's just we're just very selective in the way we do it.
Second thing I have, the data warehouse that you're alluding to, is this something we can do by regulation or something we need to legislate?
It would have to be funded.
Okay, so we have to appropriate.
It would have to be appropriated funded. The other thing about some of these systems that have been proposed over the years is they require anywhere from a 3 to 5 year implementation period before you see real results from it. And I'm just not a proponent of doing something that's that customized, because then you have to maintain the technology staff that knows that system only. And that's part of the problem with our system today is so many of those embedded software programs, the technology people aren't being trained in them and can't maintain their technical skills in it, so we have to pay more to get people familiar with it. The type of programs that we want are market-based, that other states are going to pay for the development cost of enhancements that we then can just roll back into ours. And that's what we're doing with our current online initiatives with withholding and sales. We're getting ready to roll out electronic renewals of IRP if the alcohol license renewal process will all be online and electronic. Yes, sir.
Mr. Chairman, 2 or 3 questions, Mr. Commissioner. We heard earlier, and I don't know if you were here, about the insurance premium taxes. And as I understand that, that's a tax that insurance companies pay in lieu of corporate taxes, and it has to do with the percentage of the actual premium charged to a Georgian. And there's a state component, I think it's 2.5% or 2.25%, and then the local governments get either 2.25% or 2.5% for a total of $4.75. Is that right?
I think that's correct. I'm not that familiar with that answer.
But it's collected at the state level, we're told, and distributed to the local level. I'm curious, are we collecting that from a compliance standpoint? Are we getting all that we should be getting? Is there ways, are there devices out there to avoid that? And the follow-up to that is that the local governments that testified earlier complainantly said it's 4 to 6 months before they get their cut from the time it's collected. And they wondered why there was such a long period of time, because it obviously cost them time and cost of money and budget money. Could you speak to any of those, or are you saying that since the department doesn't deal with those, you don't?
I can just tell you what little I know of it is it's 100% administered by the Department of Insurance. I do know that there have been some state auditor reports that have made supposition, if you will, I don't know what basis they made it, that they felt like there was probably money being left on the table through compliance by underreporting and underpaying. Some people have proposed converting that tax to just going back to a corporate income tax on the insurance companies, making it revenue neutral or a reduction, however, to make Georgia more competitive in that industry. the few conversations I've had with Commissioner Oxendine, he felt, and the feedback he got from the state auditor was, with greater technology, they could do an enhanced job at complying with that requirement, and there probably would be more revenue to be collected. Yeah, I don't know what system they're using. I just know that it's a similar function to what we do every day between motor vehicle and tax, and the economy of scale would be there for us to do it, and we'd be happy to.
One more, and I'll leave it alone. About the auditor, and maybe I just didn't hear you correctly. I know that you said that you didn't want to audit every single tax return or appear to be too overzealous or too hard-hearted for our citizens, and I certainly concur with you. But you do believe we still need more auditors? Is that right? But you also don't want to have other employees that are as important to the department displaced as a result of that. Is that a good summary of your?
Yes. I mean, because right now we have to go from certain areas of focus to others from one year to the next. And so there are certain parties in certain industries that will never see a state auditor. And that's not necessarily a good business practice either. There are also some industries that require you meet a minimum audit percentage as a standard in order to qualify for outside support, whether it be federal matching money or otherwise. And there it comes to mind is in motor fuel. If you don't, we've been written up in the past for not auditing a great enough percentage of the population in that area. So there's, on the average, an average auditor in their just normal work without getting overzealous and being properly managed will end up collecting anywhere from $1 million to $2 million a year, and larger in corporate environments or refund claim denial, that number can be multiple times that large. So we are far from a diminishing point of return on the effectiveness of auditors.
Are you going to come to us during budget deliberations with a number that gets us to that diminishing return level?
If I'm asked to, I will, and if the governor allows me to do so, I'll be happy to.
Thank you.
Mark, in discussing the insurance premium tax, that has been used as a negative, the level of Georgia's tax being out of line with a number of other states. It's been used as a reason that we do not become the location for corporate offices or head offices of insurance companies, and have in fact lost maybe one or two of ours, I'm not sure the number, to other states with a lower premium tax. I guess in thinking it through, maybe it was mentioned this morning what the basis is for local governments receiving the premium tax, but do you know what the original basis was for that tax?
I've heard it, and Ed Maney might be able to tell us, but I don't recall. Ed, do you know? We'll get you a written response to that.
Well, I mean, other than it's a service that's delivered based on that. Most of them have a fire department fee now they charge as well. So I'm just curious.
Yes, sir. Just a quick question. We often get constituent calls about revenue. I
get a few.
I imagine. I had a constituent call and had a question about a refund. I think it was in Selden use tax area, and they called about inquiring. Somebody had literally misplaced a deal. I don't know if they sent $5,000 to the 500 or 50,000 to 5,000. They were told that if they initiated the process for a refund, it automatically triggered an audit. So be careful what they ask. You're telling me we're short of auditors, but you get something that simple. Is that our policy that if somebody asks for a refund, it automatically triggers an audit for something as simple as that?
Well, it depends on what people's definition of an audit is and what an auditor does, and it will get a review. It doesn't necessarily constitute a full-blown audit of the company per se, but it would depend on the situation, the circumstance, and the dollar magnitude. and they're filing an amended return. But if it's a significant dollar, and the amount of, and the percentage of ones we end up rejecting and the dollar magnitude that we reject, it does warrant a greater share of our review process to go on the refund claim, because there are practitioner groups out there that's all they specialize in. It's just like on tax incentives. We find that more than 2/3 of those are taken on amended returns. So it really has nothing to do with the economic decision to locate in Georgia to begin with. That decision's been made. They came here, and if a practitioner group can come along and say, we can make you this kind of money because Georgia offers this, as I said before, it's like Paul O'Neill said when he was running Alcoa, if you're giving money away, I'll take it.
But again, it's not your policy that just when somebody inquires, they can show you exactly what happened on here, that's going to trigger. Because the way this person alluded that had been represented to them, basically the guy, the individual on the phone, was trying to talk them out of fixing the error.
That's a management problem that we need to fix. Nobody should be told that. I mean, we do review more refund claims than I would like. I drive Mr. Manny crazy on that quite often. But every time, it's the data is there to substantiate the need for doing that. But some of that is just the type of response and the way that response is given is not. That's a management problem to me.
You stated earlier about some back taxes that were owed, and that there are a number of people in society that have got the system figured out in regards to how far to play it until their wages are garnished. Would you have a suggestion as to some penalty that could be put in place that might prevent that?
I think that people that are inclined to do it are going to continue to do it. I do think enforcement, where we can demonstrate that they are habitual and have a more enforcement capability and capacity to prove that they have been egregious and repetitive, that we can take it to another level, would be helpful. It's just like in the past, the fine for bouncing a check for an alcohol citation was $100. Didn't matter if it was a $50,000 check or a $100 check, and it never went up. So we rewrote all those regulations and guidelines so it's progressive penalty. But the fourth time you do it, the third time you do it, the license is getting suspended for some length of time, and the fourth time it's going to get suspended for so long the distributor is going to move the business somewhere else, keep from losing market share. That doesn't exist in the tax, in the general tax code. It's not progressive where we can demonstrate that. And somebody should, if they earn that right, should deserve a little cumulative treatment. And we can certainly bring back some suggested structures as to how that could be effective. I don't want something that can be overused or abused by different administration of the department from one generation to the next. And you should have the ability to start over at some point. But when you're taking through the department through it, year in and year out, every return, then that's a waste of everybody's time, especially when those people are lecturing us on how to live our life every day.
What, do you have any handle on these habitual back tax? What's the number or percentage or amount?
Well, the ones we know about that are under lien is down from $1.6 billion to somewhere in the $700 million range, looking at a 12 to 14-year period of time. It's still owed, and we're still collecting it. It still amazes me how much money we collect from people that owed money from 1992, 3, 4, and 5. The program that we've done in the last year with the automobile transfers from out-of-state dealers has been a phenomenal success, and most of the counties have participated in that and done a great job with us as well. We had funding in the last year to get 9 contractors to help remove the $300,000 vehicle transfer backlog in our Rome operation. We've gone through 150,000 or so of those accounts now, and some of those transfers are 8 and 10 years old, and that group's collected over $12 million with 9 contractors. And that's what I could get everybody to settle on as contractors, so they wouldn't be permanent employees if they didn't prove successful. Well, they proved themselves successful for a number of years in just a year's time. And again, we can go down, you can come to the department, and I can take you through different sections in areas like sales tax and withholding tax and show you one case after another. It's just massive.
one more question.
Yes, sir.
Is there, I mean, if 9 are bringing this in, is there plans to increase that, or?
I'm sorry, can you repeat the question?
Is there plans to increase that, maybe to, if 9 are bringing in this sort of back taxes that are owed, why would we not want to contract with somebody who's not a government employee, but sub it out with good oversight to bring in more?
Well, that's sort of what we ask for every year. I mean, that was a specifically identifiable group that we could tangibly quantify and put our hands on. Some people think that when we talk in these terms, that people are just past due by a few months, and we're just talking about what's actually delinquent and which actually has a lien on it. And we do use 4 private collection agencies to do a lot of this work, so our folks can focus on the corporate evasion more so than individual evasion. And so we're constantly in communication with the collection agencies not to let their staff get overzealous or violate any of the collection laws. And that's why you don't get any more complaints than you do on that activity, because if I don't get them, and I know you'd get them if those agencies were abusing it, but they've got a pretty good deal going. That is just the dynamic, and my assessment is that when people start prioritizing needs, regardless of how effective and how much collection we can get and what it then can pay for, people quantify whether we've sustained our budget cuts like other state departments, and they level equity and fairness through state departments as opposed to what the resulting end product would be and what could be done with that end product. And that's beyond my policy input.
Mr. Commissioner, you mentioned earlier that when you tied the alcohol license renewals to the ability to check delinquent tax obligations, that pretty well cleared that up in a hurry for you. And you also talked about the ability to maybe do something like that with professional license groups. Are you able to do that now, or would it require legislation for you to be able to do that, or would it simply just be a budgetary process where you were given the funds to allow you to do that?
With respect to alcohol license, just a point of clarity, it helps solve a current outstanding, but it is very effective every day, where people will show up with sacks with $20,000 cash in it. It's unbelievable sometimes what they'll do. So it's an ongoing tool that needs to be used forever. It would require legislation for what I'm talking about, that you couldn't renew certain types of licenses or permits unless you could demonstrate that you'd filed a tax return. And it'll be up to us then to determine if they filed the right return and if they're reporting the right amount of income. But I think most people who try to do the right thing year in and year out would welcome it and wouldn't have a problem with it.
Or would that be something that you would be prepared to ask for, like in the coming session?
I'd be more than happy to suggest that idea. And again, it's a concerted effort with what legislation the department brings forward with the administration. But I think less controversial or potentially controversial would be getting the corporate officers through the Secretary of State's network. That should be uncontroversial across the board in my mind. The issue with respect to the business licenses is who's in and who's out. And if anybody's in, everybody should be in, and have the determination to work through that exercise, whether or not you're going to include all professional groups or just vocations.
Mark, I had two. I like compliance, and do we have any kind of, do we just piggyback off the government as far as 1099s and W-2s are concerned? Do we have any enforcement laws? If a Georgia employer is not giving out 1099s, do we just piggyback off the federal government?
Yes, as far as I know.
In the second, I see, and I have attorney-client privilege with a lot of our clients, but we have an aging population where there's more and more folks that have household employees and employees. And it bears me a little bit that the federal government's easier to deal with. You file a 1048, and you just and that's very simple. And it's hard for a 70-year-old person to call the DOL and contact Department of Revenue and get the identification numbers and file a G6. Do we ever have, a 1040H is a very simple return, pay your FICA taxes and your federal withholding. Do we ever have, I believe you get more compliance if you made it easy on the Georgia side.
We'll certainly put that in our list to review, but I think a comment was made earlier that by Mr. Dixon that we were checking. I'm not sure what thought we were checking on certain federal exemptions, but I'd like to think we're kicking returns out for special review and disallowing things or not. This state has just grown so much greater than the department is. In a lot of areas, we're just not that sophisticated. And because all the numbers that I'm giving to you in the lack of compliance, those are in known identifiable situations and businesses. I'm not talking about what sometimes are referred to as the underground economy, like waiters, waitresses, anybody else with tip income, casual labor, day labor. I'm not quantifying that at all. When you see the federal reports on some $365 billion they think is being evaded, they are estimating what goes through that unidentified income. We're not using those numbers at all.
Any other questions for the Commissioner?
Commissioner, you alluded to the idea of suspending licenses. I'd very much like to see legislation offered that would suspend any professional license where there is a tax liability that is not being paid. And I think you'd get a lot of compliance out of our profession if we did that. I know we have an attorney in Columbus who just won't pay his taxes and runs for office, and I'd like to see his license suspended if he won't pay his taxes.
I can tell you we have chiefs of police around the state that have side businesses that don't file income tax returns on the business or individually. Yeah. A more practical way, I mean, that would be a very effective way to get there, rather than just the suspension that maybe what you're referring to, is not allowing them to renew it if it's an annual license. If it's once you're licensed, you're always licensed, then suspension would be it. But to get into the intra-year suspension or not, that would be a huge administrative inconvenience for a lot of people, not just the department, but also the taxpayer. So a more middle ground way, but effective way to get there is on the renewal cycle, just to get it.
We have to renew our license every year, and somehow or another they keep renewing this guy's license for it.
It's a total disconnect.
Anything else? Commissioner Graham, thank you.
Thank you.
Our final presenter is the Director of the Fiscal Research Center at Georgia State University, Dr. Soquist. If you come forward, appreciate your patience.
I'm joined with my colleague, Jim Alm, who's going to do part of the presentation, but I'm going to begin. I've got PowerPoint, and you've got the slides in front of you. This afternoon, the concept of collectability took various forms, and you'll see the spelling also varied from each speaker to each speaker. The speakers this morning identified three things. They talked about specific compliance issues, such as the local sales tax on fuel, the use tax on remote sales, and they talked about enforcement kind of issues, particularly Commissioner Graham. We also identified tax-based issues. For example, the voice over internet protocol, which is not subject to tax, and some people argue that it should be. And equity issues such as the distribution of franchise fees. And there's also discussion of tax administration issues, such as the deadline for filing property tax digest with the Commissioner. I'm going to talk mostly about the first of those, the compliance kind of issues and some administrative issues. And the three topics that we want to cover. One is discussion about the tax gap. And I want to talk about, Jim's going to talk about why it exists. He's done a lot of research and experiments on that issue, and then what can be done about it. The tax gap is simply the difference between what you would expect to collect from a full compliance tax collection less what you actually collect. So what should you collect if you got full compliance less what you actually collect? So what we want to know is how big is this problem? Okay? Is this something we really need to worry about? Is it, $1,000 or $1 billion? Well, we don't really know. There's been no study of this in Georgia, but there's been some work that we can rely on. Minnesota's done a couple of studies looking at the sales tax gap. It's a fairly extensive report that they do, or study they do. They take audits, but they also take measures of the overall economy, try to factor all that in. And they estimate that this is in 2000, which was it's a recent study, but the number is kind of old, about $450 million in lost revenue, or about 14% of sales and use tax collections is missing. Much of that is from underreporting, and a lot of it is from non-reporting. So you get both misreporting and non-reporting. And it's projected to grow to about almost $700 million in 2007. Washington does a similar kind of exercise, but they rely only on audits, and so it's a much narrower focused research. But they also look at excise taxes. They estimate a much smaller gap, about $182 million, and only about 2.2% of the tax liability is not collected. So they estimate a much smaller gap. They point out, and both of these studies point out, is that there's higher non-compliance among newer firms and smaller firms. These are with sales and excise taxes. Commissioner Graham mentioned the IRS. Their last study, which is recently released, estimates that the federal government loses about $345 billion a year, a non-compliance rate of about 16% on their taxes. That includes the personal income tax, the corporate income tax, the payroll tax for Social Security, other excise taxes. So it's a fairly comprehensive study. They break it out, about $27 billion, or about, I think that's almost 8%, is from non-filing. $285 billion, or about 83%, most of it is from simply underreporting. Most of that is from the individual income tax. And then $33 billion is from underpayment. They also break it out by type of income source. And what they find is the largest amount of noncompliance is with the individual income tax is with business income. Wages, because they're subject to W-2, are reported, and there's very small noncompliance there, but it's the looser things in the tax code that gets avoided. And these are individuals, not necessarily firms. We did some comparison of federal returns to Georgia returns. We can get data from the federal government about income tax returns for Georgia residents. And we compare that with the number of returns filed by Georgia residents in the state of Georgia for the state income tax. And we lose about 7% of those returns. So there are about 7% fewer returns filed by Georgia residents for state taxes than there are Georgia residents filing for federal taxes. We also can't find about $3 billion in federal AGI on the state income. So that suggests that that's the sort of magnitude of the income tax problem in Georgia. Both non-reporting, this would be non-reporting in Georgia. The non-filing, non-reporting that the feds pick up is much of that is also applicable to Georgia. So this is just the non-filing part for Georgia. Now these are kind of crude, they're back of envelope estimates. We haven't done a real serious study. We also looked at sales tax per capita across states with similar sales tax rates and find that Georgia tends to have a much lower revenue per capita than other states. You can explain part of that by differences in the economy. Some states have more tourists. Some have different tax bases. They tax different things. We haven't investigated that, but it's suggestive that maybe Georgia's not collecting all the sales tax they're collecting. The property tax, we can look at collections. So you compare what's collected on time relative to what's levied, what the tax bills that were out. And generally, counties collect anywhere between 94 to 98% of the tax levy within the due date. Ultimately, they probably collect 99% or more of that tax. Some of it gets lost because they actually do sell the house on the courthouse steps, and they don't get enough money to cover the revenue, the lost revenue. But most of it that's imposed is collected. But that doesn't cover the kinds of things that might be avoided. For example, inappropriate homestead exemptions. We have no idea how frequently that's done. Whether someone gets a low-income elderly tax credit, their income goes up, and they continue, property tax credit, homestead exemptions, and then continues to receive that. Or they get a homestead exemption, and then they move and decide to get another homestead exemption in another county and rent the original one and continue to take the homestead exemption. We have no idea how frequently that occurs. Automobiles get registered in the wrong county. You see houses in my neighborhood with a tag, and I live in DeKalb, close to Fulton, and I see cars with Cobb County on the license plate. They're registered in Cobb County, but they're residing in Fulton and DeKalb. Fulton County, Virgil Moon talked about the loss in revenue in Cobb County. Well, in Fulton County, if you look at the numbers, they've actually had a decrease in the number of registered automobiles. Now, we're not talking about Fulton County and their tax assessor's office, so that might explain part of it, but it's clearly not because of loss of population. So we're not sure what's going on, but maybe it's that they're registering elsewhere. And then there's misreporting of personal property. That's self-reported generally. I know of a study that was done in Wisconsin. They went out and did some severe auditing of larger companies out of state and came back and said they found lots and lots of missing personal property for Wisconsin. I tried to find a copy of this study, but I couldn't, so I can't tell you exactly how much of that is actually lost. But that's basically the story that we know of on the tax gap. Let me ask Jim to come up and talk about why this gap might exist.
Thank you, Chair O'Neill and Representative Tomlin. Thank you for the opportunity to discuss some ideas here. As someone who's not quite as centrally involved in the trenches and the front line of tax collection and compliance, like many of the presenters here, I think my perspective on these things is a little different. What I'd like to do is talk about some work that I and my colleagues at the Andrew Young School of Policy Studies and elsewhere have done that I think is relevant to why the tax gap exists and ultimately to what can be done about this. Let me start with some of the more obvious reasons for the existence of this tax gap, for the difference between revenue expected from full compliance and revenues that are actually collected. Listed up here, I think the part of the explanation is that people simply make errors, unintentional errors. In their bookkeeping, they also make errors because they don't fully understand the tax laws. And so part of the explanation is somewhat is unintentional and doesn't have the same connotation as evasion. Another part, probably the larger part, is that people cheat on their taxes. Some don't file tax returns at all. Many of those who do file returns misreport various items, either under-reporting income or over-reporting expenses and deductions. There are also instances, as we heard from Virgil Moon, among others, this morning, where firms that withhold taxes on income and payroll or on sales and excises, gasoline taxes, for example, do not remit these taxes to the authorities in any kind of timely way. This is a big issue in many of the countries where I've done work. Underlying all of this, I think, are weaknesses in tax administrations. Few audits, tax auditing systems that are outdated or underfunded or poorly targeted, even poor remittance procedures, even corruption and fraud among the tax authority, although I hesitate to raise that issue with the commissioner here. To focus more on some of these different aspects of these three basic reasons, let me now talk about some recent research evidence on this basic question of why do people pay taxes and why do they not pay taxes in some instances. This research has been done by economists, by social scientists, by tax administrators. here in the United States. Dave's made some reference to it, around the world as well. And I think it has relevance to the issues that you're facing here in Georgia. A standard and obvious conclusion, first reason for people to pay taxes is the paddle sitting on top of the refrigerator that Wes made reference to. That enforcement is a central factor in people's decisions to pay taxes. This means that fear of detection is a powerful incentive for people to pay taxes. If they're afraid that their cheating will be detected, they're more likely to pay. And so the tax gap will be smaller. The evidence from empirical work on this, done by IRS, done by me and other colleagues in a variety of settings, is that typically a 10% increase in the audit rate, 10% increase in the audit rate, will increase reported income by 1 to 2%. So incentives matter, and incentives are affected by audit rates, although the payoff for extra audits is not perhaps as large as you might expect. There are other ways also, though, of increasing the fear of detections. Audits can be more selectively targeted to certain occupations and sectors where cheating has been found to be prevalent. Bart Graham talked about targeting certain occupations, and that's been shown to be effective in many places around the world. Source withholding reduces the opportunities for cheating. Wider use of third-party sources of information, these warehouses, data warehouses that Commissioner Graham talked about, I think also are useful. Information sharing between states and the IRS can increase the probability that cheating will be detected. Relative to or related to enforcement is the fear of punishment and the penalties that are associated with that. There hasn't been too much talked about so far today about penalties and increasing penalties, although Dan Ray talked about the fact that the interest penalties do not really bite until 6 to 7 months into the process, and he wanted that to be changed. Most monetary or financial penalties that are imposed in most all countries around the world, including the United States, are relatively small. Typically, penalties are back taxes plus interest penalties of 10% perhaps. These can accumulate over time, but it's not until you really get into fraudulent evasion and activities that penalties begin to increase. And even there, typical penalty on fraud in the United States, individual income tax, is about 75%, and that's only when it can be proved. The evidence from empirical work done by the IRS with their taxpayer compliance measurement program is that increases in penalties can also increase compliance, although again the payoff tends to be relatively small. 10% increase in the effective penalty rate. 10% increase in the effective penalty rate increases reported income by 1 to 2%, usually a little bit lower. So there is a payoff, but it's not a huge payoff. There are other ways by which punishment can be imposed other than simply financial penalties. Sending cheaters to prison. Think of Leona Helmsley and her prison sentence, I think was an effective deterrent. Even making the names of cheaters publicly known are also forms of punishment. Anecdotal evidence. A city in India outside of Mumbai was having trouble with people not paying their property taxes. And so what they did was they sent around drummers, big drums, who would sit outside these people's houses and just beat on these drums around the clock until people kind of gave in. I guess the analogy here would be to, and all apologies to any fans of this artist, Barry Manilow songs played outside people who are not paying their property taxes. There's also evidence that linking taxes paid with government services has shown to increase people's willingness to pay taxes. People don't like paying taxes, but if they can see that they're getting something for what they're paying, they are more likely to pay, and there's evidence that this is a fairly effective way of reducing the tax gap. There's evidence that people will pay more taxes the more they feel that government is responding to their wishes, again, getting something in exchange. And there's even some evidence that positive rewards to individuals who are audited and found to be compliant, outside of any penalties and such, positive rewards, becoming eligible for a lottery, for example, with value-added tax around the world, has been an effective way of increasing compliance. There's also some evidence, and this gets at a variety of things that people have talked about, including Commissioner Graham, that providing better taxpayer services encourages people to pay taxes. Here we mean that tax administration basically makes it easier for individuals to pay their taxes, things such as websites, phone services, e-filing, treating basically the taxpayer more as a client rather than as a potential criminal. Think of Commissioner Graham's comments. We don't run a gotcha operation. And there's evidence in a variety of settings around the world that this increased compliance as well. Related to making it easier for individuals to pay taxes, there's some evidence that a simpler and more stable and more conforming tax code also encourages more compliance and so a smaller tax gap. Doing so will also reduce those unintentional errors that are a reason for the tax gap. Finally, economists are recognizing, with the help of other social scientists, especially psychologists, that although incentives matter, fear of detection, fear of punishment, linking services and so on with taxes, incentives matter, there are other more psychological factors as well. One of these is that there's evidence in many countries of what might be considered a social norm for paying taxes, a tax morale aspect. What's meant by this is that a social norm is a pattern of behavior that's judged in a similar way by others and that is sustained in part by social approval or disapproval. Most everybody here leaves a tip when they're leaving a restaurant. Why is that? If you're going to be in a restaurant where you're never going to go again, then why leave a tip? Well, there's a social norm of doing so. That's a pattern of behavior that everybody expects. Similarly, in the case of compliance, there's evidence that there is this social norm of compliance, that if you think everyone else is paying their taxes, you are more likely, not guaranteed, but more likely to pay your taxes as well. And conversely, if you think that there is a culture of cheating, a culture of evasion, if you think everybody else is getting away with cheating, then you don't want to be the sucker who pays your fair share of taxes, and you won't pay as well. This notion suggests that you will tend to comply as long as you think others are doing so, and you will tend to cheat if you think others are doing so as well. And there is some evidence that there are a variety of government policies that can affect this social norm. In that context, let me just mention a little work that's been done on tax amnesties, my own work on tax amnesties. The evidence that we have accumulated on that is that revenues typically fall after a tax amnesty. There are exceptions, revenues from regular collections. And this is most likely due to people expecting another amnesty in the future, as well as on their notion that past cheaters are being forgiven in some way, and they are therefore becoming suckers for paying their fair share. On the other hand, there is some evidence that revenues can increase after an amnesty if, big if that amnesty is associated with greater enforcement efforts. And so amnesties may then be a way to ease the transition to a new tax system that does have greater enforcement. This doesn't exhaust a list of things that researchers have looked at, but I think you get and for example, Wes Clark talked about different kinds of taxes, tax structure, for example, being harder or easier to collect. Property tax in particular being hard to evade, hard to avoid. There's evidence that if you lower tax rates, you reduce the incentives for people to cheat, and they will comply more. So there are other factors that can increase compliance and that can reduce the tax rate. All of this then leads into the idea, what can be done? And at this point, I'll play tag team with my colleague and let him finish up.
Given what Jim said, it's pretty obvious the kinds of things that we might want to recommend. Many of them have already been suggested by previous speakers, which is the problem of being the last speaker. Everyone has said what you wanted to say. But clearly, there are three different kinds of things you can do. One is to increase the threats, either increase the probability of being caught or the penalty if caught, improve service, or change the culture or the norm. Let me run through a number of things about threats. Some of these have been mentioned already. Increase the number of audits. Research that's been done on that suggests that for every dollar you spend on auditing, you generate maybe $3 to $4 in increased revenues. And clearly that goes down. The more audits you do, the more compliance you get, and therefore the less you're going to get from audits. But you can also improve the quality of the audits and of the auditors. We know that on sales taxes, the biggest compliance problem is with new businesses and with smaller businesses. And it's because of ignorance of the tax law. At least that's a big part of it. So part of the audit process might be to educate the firm. So rather than trying to find out what happened or what's wrong, trying to find out why something is wrong, find out the cause. And so focus the audits on having a more educational attainment. Also, the quality of the audit depends upon the quality of the auditors, and the salary that's paid drives in part the auditor. Students coming out of accounting programs, they have lots of options, and if the state pays a lot less than the private sector, those people who can't get private sector jobs are those who wind up getting in the public sector jobs. You can increase penalties. Jim's already mentioned that. You can publicize the cyber version of it. You can do other things like withholding driver's license, withholding occupational licenses, and things like that. A lot of states and the federal government does this, is trying to use scoring to target the audits that you do. Rather than doing sort of random, you determine, well, who's the more likely candidates who are not reporting properly. We know where the bigger audit monies come from, and so you can go through a fairly sophisticated program to determine what's the likelihood that this taxpayer isn't appropriately complying. Jim mentioned to me earlier that there was a study that was Oregon that they looked at the results of the audits that were done by the audit department in Oregon and compared that to what they would have gotten if they simply followed the federal audits, which is done on a random basis, and they would have been better by just following the federal audits. They were not trying to target. Use other databases to identify audit targets. Who are the non-filers, for example? So you can go to driver's license data, occupational license data. If you could get Social Security numbers on property, you could determine who's got rental property and not reporting that. The state collects the unemployment insurance. It's an alternative record of employment, so you can determine if there's somebody who's employed but not reporting. You can allow third-party audits. Ohio does this. Rather than actually auditing, when you send a pre-audit letter to someone saying, you've been selected, lucky you, these are firms, the firm has the option of going and finding a third party to audit. That way they have some control over the audit, not the results of the audit, but the scheduling and the inconvenience that arises by having someone parked in your business trying to do an audit. You also allow audits to be done voluntarily prior to any letter from the Department of Revenue so that they can go through and say, well, okay, we had someone audit our records and we didn't comply fully. We had some errors with our exemption certificates, and therefore we owe you X amount of money. And when they do that, the state doesn't charge them the penalty and interest, at least not the penalty. You can share information across states with multi-state firms, finding out who's engaged in certain kinds of tax shelters. Some places have actually gone and asked another Department of Revenue, for example, in North Carolina, to find out who the furniture manufacturers ship to out of state directly. So then find out that Jim Alm bought a $5,000 sofa, and we have no record of him paying use tax, and so we sent him a bill for the 7 or 8% on the furniture. You can do that sort of thing. You can do more than simply piggyback on the IRS reports, IRS audits. Clearly, that you ought to do that. You ought to, if the IRS audits and says you misreported, you have actually $10,000 more in income than you reported, and you owe the IRS so much. The state ought to follow up quickly with a letter saying, in that case, you owe us this much money. But as we said, there are non-filers that file federal but not state, and we ought to try to find those. Also, the IRS audit rate is pretty low. They don't audit very many people, and so the state might want to audit more than the feds do. Contract audits, Florida does that. A little controversial, but rather than hiring auditors, you can contract out to do audits. One suggestion was to disallow cash deductions. The federal government has done that for contributions to charities. You've got to have a letter from the charity. You have to have a canceled check. You can't use cash anymore. Cash payments are the easiest way to avoid taxes. Paying you pick up someone at the Walmart to come in and do some yard work, and you pay them cash, and they never report it. You could require businesses, I'm not sure you do this for the individuals, but you could require businesses to not allow any exemptions or deductions for cash payments. They have to, if they're going to deduct a cost, it has to be paid by a check. Otherwise, they have to identify who it was, and Social Security number of who they paid, the tax identification number. So you can determine that these firms were collecting cash, and you can track that back. That's probably difficult to do, but not impossible. Some places have experimented with requiring increased information for selected taxpayers. For example, with businesses that have rental property, sending a letter out saying, we want you to itemize all the expenses. And what they found when they did this, they did a comparison study, a random sample, that there were more accurate reporting of those deductions. You can also increase the power of collecting delinquent taxes. We've already mentioned some of those, but the right to bid on government contracts, the vehicle license, revoking professional businesses fees, and driver's license. Improving service. I should mention that the Georgia Department of Revenue has moved in a lot of these directions. And so what we're suggesting here is not things that the Revenue Department isn't doing. Last fall, we put on a program, a session at the National Tax Association meetings in Washington, and invited the commissioner to make a presentation in one of the panels talking about compliance kind of issues. And he was the head of the program. He talked about what Georgia was doing, and people were saying, we need him running the IRS. So he was, what they're doing here is quite important. On improving service, simply becoming more customer friendly, easier said than done. Simplify the tax laws, make them understandable so that people aren't filing in error. You simplify the tax forms. In some cases that means reducing the number of lines. In some cases it may mean increasing the number of lines so that people actually see what has to be reported and actually do the arithmetic with the form. One experiment that was done, they found that when they reduced the number of lines, people were making mathematical mistakes. But when you included a deduction line, they actually made the calculations correctly. Edit the instructions, get a professional editor to look at the documents. Improve phone service, increase the number of lines, the number of operators, the hours of operation, and improve training of operators so they don't make errors when they answer questions. You improve the website, that's being done. But remember, a lot of taxpayers have 8th grade educations, and you've got to have a website that allows them. You also allow submitting of questions on the through the internet rather than by phone. Jim mentioned emphasizing the link between payment of taxes and receipt of government services, so you see that taxes are a payment for benefit. And then culture changes. How do you change the norm? States are using mass media to try to do that. They're sending out letters, either talking about the need to file because it generates benefits, or making the case that this is the norm, that most people file, we collect most of the taxes, and not filing is not the right thing to do. You target certain groups to do that. Do education programs. The Department of Revenue is doing some of that. New firms, new employees, high school, college graduates. You list other organizations to promote, get teachers, retired police officers to talk about the importance of complying. You want to avoid having people think that cheating is okay. When the IRS was vilified in Washington, compliance rates went down because they thought, well, that's a bad organization. We don't have to work with them. We don't have to pay. So those kind of speeches yield a result that cheating is okay, not the norm. And then inequities in the tax structure lead to perceptions that this isn't something I want to deal with. So having a tax where you feel that you're paying an equitable amount will increase compliance as well and lead to a positive norm towards taxes. So that's our story. We'll be happy to answer any questions.
Any questions for Dr. Soper?
Not so much a question. I just want to thank you, Dr. Circus and Dr. Holm. That was an outstanding presentation and probably more on point as far as consolidating and framing the issue that's under consideration that we've had at any meeting. And I want you to know how appreciative I am of that and take from your presentation and your written comments many outstanding suggestions, which I hope will maybe show up in the form of improvements in our code in a very short time to come. We thank you very much for that.
Thank you. Appreciate the compliment. Thank you for staying. A long day.
That was delightful. That was a good presentation.
Thank you.
Is there, if there are no other questions, thank you, Doc. Thank you. And Jim, too. For those of you that didn't get enough of this will be on the website tomorrow. But this, this is part of the new House rules, and it'll be part of the House communication has been filming it. And so that's at www.legis.georgia.gov. Before I turn it back over to Larry, I'd like to thank Chairman O'Neill for allowing this to come to Marietta. I think it's great that we're sharing this around the state. And I'd like to thank Ward Lamb here and the House Communications for what they've done, and for the 24 people that have helped in one way or another. I would just like to thank you because I think it's been a good experience for the state and other, and especially Southern Polytech. Thank you. I'll turn it back over to you, Mr. Chairman.
Well, thank you, Chairman Tumlin. I certainly want to thank you for all the hard work that you put into to organizing this very organized meeting, and I mean that sincerely. Certainly want to thank our friends in the city of Marietta and all the government from the city that came and shared with us today, and Cobb County for your very sincere and candid comments, all of which are very helpful to the mission of this committee. I realize this is not sizzlingly interesting stuff, but it is sizzlingly important to the state of Georgia and the citizens of the state of Georgia. And to the extent that each and everybody in this audience and others around Georgia have contributed to this effort, we're grateful. We truly are grateful, because you're giving us tools that we need to do the best job we think we can do for you. But again, thanks to Representative Tumlin and all members of the committee, our Senate colleagues here. Thanks for your involvement in the process and your very astute questions. I'll just close by saying the next meeting is going to be down in Griffin somewhere.
Yes, sir.
It's going to be on August the 9th. We know that already. The place, I think, will probably
University of Georgia, the Griffin campus, University of Georgia.
Go Dogs Griffin campus down there in Griffin. We're looking forward to that because it's the obvious segue from collectability is compliance. And we're going to hear from a lot of these incredibly interesting, witty CPAs around our state. I remember the joke when I was in accounting school is that I was there because I didn't have enough personality to be an engineer. So we're going to hear from a lot of our friends in the business, especially on the side of compliance, and I think it'll be one of our more interesting missions. So without any further, if there are no further comments from any members of the committee, I think we'll adjourn and thank everybody